80558 and ER 200805559. Adequate public notice has been given pursuant to the Open Public Meetings Act. Notice was posted on the board's website last week. With us today is Deputy Attorney General Brandon Simmons, who will be advising us during this hearing. In addition to the evidentiary hearing, the board held 2 public hearings and accepted written comments, which provided an opportunity for public comment regarding these matters. May I now have the appearances, please, starting with PSE&G or PSEG.
Good morning, President Fiordaliso. Good morning, Commissioners. My name is Grace Park. I'm pleased to represent applicant PSEG Nuclear, and I'm joined at our virtual council table by Matt Weissman, Tammy Lindy, and Matt Price on behalf of PSEG Nuclear.
Thank you. Next, please, who would like to put their appearance before us?
Good morning. This is Jeffrey Mays. I'm General Counsel of Monitoring Analytics, acting in its capacity as the independent market monitor for PJM.
Thank you, sir. Next, please.
Good morning, Mr. President. For Rate Council, this is Stephanie Brand, and at council table today we have Brian Lippman, Sarah Steindell, and David Wand.
Thank you, Director. Next, please.
Good morning, Mr. President, Commissioners. This is Alex Judd from Dave Pitney on behalf of Exelon Generation. Along with me, I have Naju Lathia, also from Dave Pitney, and Gene Duretsky from Exelon Generation.
Thank you. Next.
Mr. President, Steve Goldenberg, Giordano, Halloran, and Cecil for the New Jersey Large Energy Users Coalition.
Thank you, sir. Next.
Good morning, Mr. President. Alice Bergen from Dakota. This is Patrick Cole and Giblin for the PJM P3, and along with me I have Glenn Thomas.
Very good. Thank you.
Thank you.
Next.
Good morning, Mr. President. Good morning, Commissioners. This is Deputy Attorney General Matt Kowilik appearing for staff of the New Jersey Board of Public Utilities.
Thank you, Matt. And I believe that's all. Anyone else? Did we miss anyone? Hearing none, I assume we have not. Just as a reminder, we do have a reporter stenographically recording the minutes of this hearing, and so that hopefully all the comments made here today will be accurately reported for review at a future date. I want to note some preliminary matters for the record. First, in the pre-hearing order, there is a reference to a confidential question and answer session. Some of the parties signed a non-disclosure agreement and indicated their desire to be involved in the confidential question and answer session. The order of presentation and cross-examination has been set forth in the pre-hearing order, and I would ask the parties to refrain from asking any questions involving or calling for confidential information during the public sessions of this hearing. After each party has had an opportunity to ask their public cross-examination questions of a witness, if necessary, we will go and enter a breakout room where the parties may ask confidential questions of that witness. Once that is done, we will resume the public session of this hearing and proceed to the next witness. Does everyone understand what I have just said?
Yes.
I also want to note for the record, and as provided in the pre-hearing order, that all documents previously submitted through the application and discovery process, including public hearing testimony, are in the record as evidence based upon the consent of all of the parties. I want to thank the parties for their professional courtesies in stipulating to the record as it makes things much easier for us, and to note that this stipulation is only as to what documents are in the record. No party stipulated to the materiality or truth of another party's preferred evidence. And the parties will have an opportunity to highlight information that they deem relevant to our consideration, or to refute, on the other hand, evidence they deem inaccurate or immaterial in their written briefs and comments, which will be filed after the proceeding in accordance with our procedural schedule. Are there any additional preliminary matters from the parties that need to be addressed before we begin? Anyone? Okay, hearing none. We will now begin with the attorney representing PSEG Nuclear. Please call your witness, your first witness.
Thank you, Mr. President. I would like to call Mr. Daniel Craig at this time. Mr. Craig. Good morning, Mr. Craig. Would you please state your name and job title?
Yes, Daniel Craig, Executive Vice President and CFO for PSEG.
Okay, Board Secretary, will you swear Mr. Craig in, please?
Karina, the court reporter, I'll swear him in.
Okay.
Could you raise your hand? Do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. Proceed.
Mr. Craig, have you submitted written direct testimony in this case?
Yes, I have.
Do you have any corrections to that testimony?
I do not.
If I asked you the questions posed in that written testimony this morning, would your answers be the same?
They would.
And you also answered written cross-examination questions in this case that were posed by board staff and by intervener P3, is that right?
That's correct, yes.
And if those questions were put to you this morning, would your answers be the same as they were in those written responses?
Yes, they would.
Mr. President, Mr. Craig is available for cross-examination. And just as a housekeeping matter, the parties, as you noted, stipulated that all the submissions in the case should be part of the record. I propose, for the purposes of the transcript and the record, that we mark for identification Mr. Craig's direct testimony dated January 29th, 2021 as Exhibit PS1, and that we mark the document containing Mr. Craig's response to board staff's written cross-examination questions at Exhibit PS2, and that we mark Mr. Craig's response to P3's cross-examination questions as PS3 for the record.
Without objection, they will be so marked.
Okay, thank you, Mr. President. Mr. Craig is available for cross-examination.
Okay, market monitor.
Yes, Your Honor. So Mr. Craig, in your direct testimony, you discussed capacity market risk, correct?
Yes, there's capacity market risk that's laid out within our testimony. That's right.
That capacity market risk is the risk that a unit will not clear because it is required to submit an offer in compliance with the minimum offer price rule or MOPR, correct?
Yes, that's correct.
The MOPR rules include a default MOPR floor offer price, correct?
Yep, that is correct.
MOPR rules also allow a participant to develop a resource-specific MOPR floor offer price, correct?
That is correct.
The MOPR provides that a participant may elect to use either the resource-specific MOPR offer floor price or the default MOPR floor offer price. Correct?
That's my understanding, yes.
The participant can choose the lower of the default or the resource-specific MOPR floor offer price, correct?
Yes, that's my understanding.
And if a participant fails to meet the deadlines applicable to developing a resource-specific MOPR floor offer price, the only option will be to use the default, correct?
That's my understanding.
Thank you. That concludes my cross.
Thank you. Thank you. Attorney representing P3, any questions for the witness?
Yes, Your Honor. Good morning, Mr. Craig. How are you?
Good morning.
Good morning. Would you agree Salem and Hope Creek have an economic advantage over nuclear facilities that would be considered single unit?
Oh, there you are. I think that certainly there are certain advantages to having multiple units in one location. That's right. We have two different technologies on the site. So I wouldn't say it may be as extreme as 3 units, but I do think having a single site does have some advantages, yes.
And would you agree in general, single unit facilities are more expensive to run on a per megawatt basis than nuclear stations with multiple units?
I think there's some data that supports that would be the case.
Have you ever heard of David Bessie Nuclear Power Station in Ohio?
I have.
And what about Perry Nuclear Power Station in Ohio?
I've heard of that as well.
Are you aware that both David Bessie and Perry are single unit nuclear power stations?
I will accept that judgment, yes.
Right, and in general then, since both plants in Ohio are single unit nuclear power stations, would they be more expensive than Salem and Hope Creek because they have all the overhead expense, you'd only have one unit to produce the power?
I think there's a whole host of cost elements that would come into play. So I don't think I would agree that by virtue of that one fact, you would necessarily determine that it would be more or less expensive.
Okay. Also, both of these nuclear plants in Ohio are in zones that generally have lower RPM clearing prices than Salem and Hope Creek. Is that correct?
I can't speak to the capacity prices, but the historical prices would be available to you.
Are you aware that in 2009, the Ohio General Assembly passed House Bill 6 that would provide $150 million a year subsidy to these 2 single unit facilities in Ohio?
I know that there's financial support that was approved in Ohio. I couldn't speak to the details of it, but conceptually, yes.
And are you also aware that just like last week, the Ohio Senate unanimously passed legislation to repeal that $150 million a year subsidy for these 2 single unit facilities?
Yeah, I know that there was discussions in that direction, so that would not surprise me.
Are you aware that Energy Harbor, the owner of Perry and David Bessie, did not object to the removal of that $150 million a year payment?
I don't know that.
Why is it that Energy Harbor, since it took over ownership of these plants, has moved these plants from needing that $150 million a year in order to stay in operation to being able to forgo this money without a protest?
I can't speak to what another owner is doing with their nuclear plants.
Could it be that Energy Harbor is operating the plant more efficiently than its prior owners, First Energy?
I can't speak to what another owner is doing with their nuclear plants.
And is it possible that new ownership for Salem and Hope Creek could yield similar cost efficiency if they were owned by someone else?
Again, I couldn't speak to what somebody else would do with a set of facilities that they do not currently own.
Well, would PSE&G consider a sale or a spinoff of these plants in order to promote efficiency and retain clean energy benefits of these facilities?
So PSE&G, just technically, it's the PSE&G power entity within our family that is the owner. And I think that we would consider any kind of a transaction. We wouldn't be opposed to any kind of a transaction in that regard.
Okay, thank you very much. I have no further questions.
And thank you. For the record, please let it show that Commissioner Gordon has joined us on this call. And also, I appreciate the brevity of questions here, because we do want to, this is the only time we have available for evidentiary hearing. So your cooperation is certainly appreciated and noted. Large energy users, Mr. Goldenberg.
I have no questions, Mr. President.
Thank you, sir. That's brief, Mr. Goldenberg. We appreciate that.
Always try to contribute.
Okay. And by the way, before we go any further, anyone who would like to join me on this beach in Trenton, New Jersey, you're certainly welcome to do so. And I don't know about you, but it makes me feel warm. So, Rate Council, any questions?
Good morning, Mr. President and Commissioners. I'm Sarah Steindl, representing Rate Council this morning. Morning, Mr. Craig.
Good morning, Sarah.
And I will be brief. I want to first follow up a little bit on Mr. Mays's questions about the impact of the minimum offer price rule and its impact on the risk of the units not clearing the capacity auction. Now, just briefly, so we understand the reason for the MOPR, it's to prevent capacity resources that are receiving subsidies from using those subsidies to bid lower and suppress prices for resources that don't receive those subsidies. Is that correct?
I think that's the flavor of it. That's right. Yeah, I would agree with that.
Okay, and this, the MOPR would apply to the Salem and Hope Creek units because the ZECs would be considered a state subsidy. Is that also correct?
Yep, I think they'd be considered an out-of-market payment that would put us subject to them.
Okay, now you were discussing the floor prices, the options for floor prices. So the floor price means that that PSEG Nuclears is not allowed to offer the units into the auction at anything below the floor price. Is that correct?
Yes.
So the way this works is as long as the market clearing price is above the floor price, the unit should clear the auction. Is that also correct?
Yes, as long as the units have bid at the floor price. That's right.
Okay. Now, is it true that PSEG Nuclear has performed an evaluation as to whether the 3 units are likely to clear the next capacity auction?
We have, yes.
Okay, and that's based on an analysis of an estimate of the floor price and the upcoming market clearing price for the next auction. Is that correct?
Yeah, those would be the 2 major elements that you would think about.
Okay, and based on that analysis, PSEG does expect all 3 units to clear the next auction. Is that correct?
That is correct as well.
And now I want to move on to a little more about risk. There's been a lot of analysis in your testimony. There is analysis of the downside risks of operating the Salem and Hope Creek units. Is that correct? Okay.
Yes, yeah, there was this discussion about the risks of operating. And just one other quick thought around the capacity item. As you mentioned, you're exactly right. We've thought about the next auction, our ability to clear that, and we do anticipate that to be the case. And we have not included any risk in the application related to this upcoming auction. And what we have done is, as we look out into the future auctions, that's where the risk of clearing comes into play within our application.
Okay. Well, back to this topic I'm asking you about now. Now, aside from what is the correct definition of risk, which I know there's been a lot of debate about in the testimony, aside from that whole debate, do you acknowledge that there is a potential that the units could end up being more profitable than PSEG is projecting?
Yeah, the units will still be subject to the market. And so there will be market effects that will take place. There'll also be cost effects that would take place. So the results will be variable. What we have done within the application is identify what we view as the cost of risks, both from the cost of market risks and the cost of operating risks consistent with the legislation.
Okay, but aside from what the correct definition of risk is, revenues could be higher or costs could be lower. Is that correct?
It is correct that it could be higher or lower on both costs as well as on revenues.
Okay, but in the event profits are higher than projected, would you agree that there is no mechanism that would require the company to share the larger than expected profits with ratepayers?
I think there are some protections, but they are limited within the ZEC Act, such as if there is a payment for the fuel diversity or other environmental benefits that the unit brings. If there's a payment for that drove you to that place, that would be the case.
So with those limited exceptions, PSEG would simply keep the additional profits. Is that correct?
I think that's correct, but I would point out, and we have said that the application does reflect a need well in excess of the maximum amount of the ZEC that can be granted. So I think while that's the case, I think that there is a significant item that should be considered with respect to that statement.
Okay, but just back to the question, you would agree that there's no mechanism for sharing profits with ratepayers?
Besides what was stated, yes.
Thank you, Mr. President. That's all the questions I have.
Thank you, Sarah. Board staff?
Board staff has no further questions, Mr. President.
Okay, thank you very much. I have no questions for you, Mr. Craig. Do any of my colleagues have any questions?
Yes, Mr. President. Thank you, Mr. Craig, for your presentation. Were these plants were profitable in year 2020, covering the avoided costs?
I'm sorry, Mr. Commissioner, could you repeat the question?
Were these nuclear plants, the 3 plants, were profitable in the year 2020, covering all the avoided costs?
Yeah, so we have submitted, probably the best way to answer that question is that we have submitted a summary of the energy year 2019-2020. And if you take a look at the 3 plants over that period, I believe the number was somewhere around a $220 million negative amount that then was offset by the ZEC amounts that we did receive of, again, somewhere in the order of $270 million. So inclusive of the ZEC, there was a modest positive amount, and exclusive of the ZEC, there was a significant negative amount.
So were they profitable in the month of February? 2021, yeah.
I don't have a
you don't have the numbers, right? Okay.
For a particular month, I'm sorry. Mr.
And do you agree that the profitability varies by month? You know, different months. Some months is low, some months is high.
Yeah, the end result absolutely would vary by month, whether it's profitable or whether it's a loss, for sure.
Right. In terms of the PJM energy and capacity markets, you know, the profits vary from month to month, and they certainly are they expected to increase, do better than year 2020?
So if I think about, tell me if I'm not getting to your question. If I think about how the plants would see market revenues on a go-forward basis, I would take that apart into 2 different pieces. I would take a look at the energy pricing, and I would take a look at the capacity pricing, and I would rely upon forward markets as we have done within our application to derive the energy side, and I would take a look at an anticipated outcome, which has been the subject of some of the information that has been passed back and forth with respect to capacity. 2024 was a particularly low year from the standpoint of spot prices. And I believe that number was somewhere around $19 a megawatt hour. And I think if you look forward within the application based upon forward prices, you would see something that would be somewhere around $24, $25. Capacity prices were what they were. I can't speak within this part of the session. I could do so in the confidential session with respect to what an estimate would be of capacity prices.
Now, with the $10 ZEC, I mean, you will have this round, you will expect a loss. Is that correct? According to testimony. Yeah.
Yes, yes.
And what would be annual loss? I mean, I guess that's a proprietary information, I assume, right? Annual loss.
Well, I'm sorry, Mr. Kushner, for which period are you referencing? Are you referencing into the 23 to 25?
I mean, let's say going forward, you get the $10 per ZEC instead of the $18 you're looking for. Will there be annual loss? I mean, that's the hypothetical question.
Yeah, I think the way to describe it is, and we've provided some information with respect to overall returns, and we provided an ROE calculation, which maybe is helpful context. And without the ZECs, without providing any specific information, there would be a significant negative amount. With the full $10 ZEC, we would see something that would be well shy on the return side of what a regulated utility would see. And from our perspective, as we think about it, Commissioner, the comparison with respect to what the risk profile is of a competitive merchant nuclear generating station compared to a regulated utility, that doesn't seem like it makes sense to us. So that's I think good context for your question.
Just so it perplexes me that why the board, shareholders are willing to accept, willing to run the nuclear plants at a loss. It doesn't make logical sense to me. I'm an engineer. Why is the board willing to run these plants if they are going to be at loss?
Well, I think that's one of the reasons we're here is ultimately we are not. With respect to a ZEC payment, that can take you to a number, and again, we've looked at it from an ROE perspective where that loss can move to a very modest profitable number, but is shy of what you would think a number ought to be for a competitive nuclear generator. We provided some stuff within the testimony that would show where that number would be. Suffice it to say, we think it would be north of what a regulated utility would have with all the regulatory construct and protections and things that are in place there. So, but make no mistake, the $10 ZEC that can be granted by virtue of this process still falls short in our view of where we think things should be for the longer term. So if we have confidence that there can be a longer term solution and not go through a 3-year cycle and get to a longer term answer, the company has said, seeing the confidence from the board being able to provide and doing what it can with respect to a ZEC at the $10 amount, the company would be willing to continue to work for a longer term solution to have these longer term assets continue to provide the benefits that they bring to the state. In years past, we've shut down coal units and have not had this kind of a process, have not had this kind of a communication or an information session to make sure that folks were aware that those coal plants would shut down. Those coal plants did not bring the attributes that these nuclear plants do. So really the purpose in all this was to come forward, acknowledge that the market is sending us signals to close these plants down, and just make sure that at the end of the day, we either do so or we don't do so because there's been an acknowledgement of the attributes that they bring and a change in that financial profile to enable us to continue to run, exactly to your point.
Yeah, I think, but your natural gas plants are profitable, right? But you're trying to sell them. That's the public information. Even
Yes.
though there seems to be a little inconsistency, right? If they're at loss, you're selling. You brought up the coal plants. Now I bring up the natural gas plants, which are profitable, but you're still put it out for market sale.
Well, I think, Mr. Commissioner, it comes down to really how the assets are valued. And I think that within our overall construct at PSEG, we didn't see that investors were valuing that merchant risk of those facilities in spite of their profitability. It was still a move that we wanted to make to market those facilities and have that value be in the hands of an owner where that value would be more appreciated. With respect to these facilities, it was not part of that sale. I do think the criticality of what they are and what they bring to New Jersey was a component of that. And frankly, we still had this process ongoing. So I don't think just because something is on the profitable side doesn't mean that it can't be marketed if at the end of the day, from a strategic standpoint, the value is determined that there would be more value in the hands of others.
If the PJM energy and capacity revenue increases, would you be willing to share that excess with ratepayers?
Well, that is not within the construct of the act. But again, if I think about what the application has put forth, and if I think about where the maximum ZEC amount could be, that amount is well in excess of where we are from the standpoint of the maximum amount. So I think that when I think about what really is happening here, what is in front of the board is a payment for the environmental attribute that the plants are bringing. And that payment at $10, I compare to an SREC at $220. I compare it to an offshore wind amount in excess of the energy and capacity, I think from a board calculation at about $46. So I put it within that construct. I think that we still are taking on the potential for downside and considerable downside risk that is not covered by that $10. And so that, I think that's how I think about where we are right now with the ZEC proceeding.
Yeah, many of us are concerned about climate change and global warming issues, and nuclear is known to be zero carbon, and everybody is chipping in. Where does your corporate social responsibility comes in addressing the carbon mitigation?
Well, I think that the continued operation of the facilities at a $10 ZEC with an application showing a number well in excess of that is part of that commitment. I could speak to a host of things that are going on the other side of the business from a corporate perspective, because you asked from a corporate construct related to our gas system modernization program and the reduction of methane that we're doing, the energy efficiency program that we have been very much in favor of moving forward on in a bigger way. So there's a host of things on the other side of the business as well. But I do think coming forth with an application in need of an excess of a maximum amount that can be granted, frankly, is a part of that. And I think we do see the importance of these facilities to the state.
Is there an assurance for the ratepayers that when you receive the ZEC, $10, let's say, and you will not close the nuclear plants?
I think embedded within the ZEC Act, there's an element of that. And so to the extent that a ZEC is granted for the second ZEC period of 2023 to 2025, to the extent that there is a shutdown prior to the end of that period, there is a provision back of the ZEC revenue that has been granted, other than some very minor exceptions. So I think there's a little bit of a self-correcting element, if you will, if that's the right way to call it, within the ZEC Act itself that looks at that. So if we were to shut down today, we would have prior ZEC payments that we have made within the ZEC 1 period that would need to be granted back.
Thank you, Mr. Craig. No further questions. Thank you, Mr. President.
Thank you.
Anyone else have questions for Mr. Craig? Commissioner Gordon? You're on mute.
Yes, I am. Thank you. Thank you for your comments, Mr. Craig. I assume as someone with financial responsibilities at your organization, you're familiar with generally accepted accounting principles and you're involved with the preparation of reports for the SEC.
That's correct, Commissioner.
I note that in the analysis of financials as presented by the public service, capital expenditures, for example, are expensed in 1 year. Is that something you do in your financial statements submitted to the Securities and Exchange Commission?
We do on the statement of cash flows, and we don't on the income statement. So it depends upon which element you're talking about. Our application was more of a cash-oriented determination as we look through the different categories of costs that were laid out for us to submit. The capital costs, in addition to the O&M, were laid out for us to include. And so that's how we completed the application, with identifying the capital expenses during those years, identifying basically all the costs to be incurred during those years, and included them within the application.
Okay, I note also that there's a good deal of emphasis placed on operating risk and market risk. And those are not items one normally finds in a 10K or a quarterly statement. I mean, is that again because this analysis was presented on a sort of a cash flow basis?
No, actually, I might disagree with you a little bit, but maybe in a different way than you're asking the question. If you think about risks being in the 10K, there's tremendous discussion of risks in the 10K with respect to the operations looking forward to the business. It's a very important element of the disclosure component, not necessarily the financial statements. The financial statements themselves are really statements of prior results, right? So it's a statement of income or cash flows for some prior period, or a balance sheet as of a particular date. And risks, by their nature, are forward-looking things that may happen. So we discuss the risks very considerably within those SEC documents, but within the actual documents, if they're describing periods and results that have happened, there's no risk to prior periods because those periods have come and gone. They've kind of been closed. So maybe a distinction within your question, but considerable discussion, frankly, about a lot of the things that we're talking about and about running nuclear plants are in the 10K, just not in the numbers, because the numbers are more about historical periods, if that makes sense.
I guess, what I'm getting at is that we as a board are asked to take action if these plants are not profitable. And when I think about measures of profitability, I think about generally accepted accounting principles and how numbers are recorded and treated over time, and as opposed to looking at things on a cash flow basis. I have a number of specific questions about the finances, which are probably more appropriate for any kind of confidential session we have. One question I think is more general is in the reports done for the rate council and done by the independent market monitor, there were references to spent fuel costs as an inappropriate expense because those costs have not been required as an expense item since, I believe, 2014, and yet you include them in your costs for the facilities. Could you address that?
Yes, I'd be happy to, Commissioner. So those spent fuel charges, just an ounce of background, they are payments that nuclear operators are obligated to make to the federal government. And the federal government will have the obligation for the final repository of spent fuel. And so you think about that as being Yucca Mountain. So nuclear operators will pay, the federal government will do the work, will create that final repository, and the fuel will go there. as you're likely aware, Yucca Mountain ended up no longer being the determined place for that final repository. So once there was not a plan in place by the federal government did not have the ability to continue to charge nuclear operators for their spent fuel because it wasn't going, they had no solution that it was going towards. They still have the obligation, but now that they don't have an answer, they can't collect the dollars. So that it's part of the Nuclear Waste Policy Act. It has not gone away, but the fee just has been suspended to zero, and we still have the obligation. We are still generating power, so we're still generating spent fuel, and we're generating more and more spent fuel the more and more that we generate over time. So, and the Nuclear Waste Policy Act still has the obligation on nuclear operators to pay. Now, we've also tried to think about it from the standpoint of whether or not these years will just be we'll get a pass. And the Nuclear Waste Policy Act came in 1983, and when it did, nuclear operators were operating before that, and there was a payment that was needed to be made for the prior obligations. So we tend to think that these years will have some catch-up payment that will come. The issue is that we continue to generate the nuclear fuel. And so I can't ignore that in thinking about continuing to run if I'm continuing to generate something that's likely to have an obligation with it. Now, without an actual amount, without determination of exactly when they will reinstitute this, under the accounting standards, I don't book that expense. So you're absolutely right. But I do continue to have the obligation, and it is laid out within the ZEC Act to include spent fuel expenses. So that's maybe a little more long-winded than you were looking for, but that's—
So in effect, you're sort of creating an escrow for these expenses?
I think you can think about it that. Now, there's not an escrow because there's no cash coming in to pay for it, but as we think about the overall ongoing operation, I got to remember that I keep generating this spent nuclear fuel, and it keeps building and building and building. So if there was a payment for it, yes, I could think about it like an escrow. It's part of the overall numbers that, again, our application was larger than the $10. So I can't even think about this as being paid for, but it's something that when I think about continuing to run the plant, I can't ignore it.
Okay. My other questions, Mr. President, I think are more appropriate for a confidential session. So I think I'll stop at this point. Thank you. Thank you very much, Mr. Crane.
Thank you.
Anyone else have any questions for Mr. Crane?
Mr. President, we'll have some redirect, but I assume that'll be after the confidential session. Oh,
Okay.
I apologize.
Commissioner Holden? Your audio is not on, Commissioner.
Yeah, it looks to be on, but
You want to sign off and come back in? Now, why don't you sign off and come back in? Yes, Ms. Park, I did not forget you as far as follow-ups, and we will certainly get to that.
Thank you.
How are we now?
I can hear you.
Yay. Okay. I think the goal of this discussion on ZECs is, how are we going to value whether or not we continue this clear energy baseload? And you have the operational risks, the market risks. I want to talk a little bit about valuing the reliability of these plants. How often do these plants run?
Around 90% is the way to think about it. They are in a perfect world, every 18 months, they would take a refueling outage. That refueling outage is, I think, around 30 days on the low side, and to the extent that you have more work to do, it can be bigger. And then there is some modest percentage of times when they just will be forced offline by virtue of, equipment issues or something happens that takes them offline unexpectedly. And so I would say high 80s capacity factor, 90%, somewhere in that neighborhood.
I think that's important to note. Would you say your market risks or your operational risks would be greater?
We've provided numbers for both of them. Those numbers are confidential.
Right. I'm thinking philosophically.
Yeah, so it's a great question. I think that they're both, I'd say they're comparable to try to generalize a little bit. I think that what we have seen, maybe just to distinguish them a little bit, is that over time, we have seen prices change. And so there's a forward market for energy prices where you can see things that are happening over time. We've seen prices come down over the last 10 years as gas prices have come down, electric prices have come down. So that is something that you can maybe see coming a little bit more than sometimes the operational risk items are more event driven. And so in some of our testimony, we've talked about 9/11. So 9/11 didn't impact nuclear plants, but 9/11 impacted nuclear plants a lot because a lot of the things we needed to do to harden the facilities. And when things happen to other plants in other areas, there are events that come back to all plants to make sure that they are protected. So maybe the operational risks tend to be more event driven, and the market risk tends to be a little bit more market driven, which maybe you can see coming a little bit. But I'd say that they are comparable in magnitude and concern.
So it would be fair to say that the operational risks, if they do come about, some event, does play into your market risk because of the cost of running the facility.
Absolutely. I mean, maybe if you think about just what happened in Texas, Commissioner, it could come into play. So I think we're all familiar with what happened there, but for whatever reason, we saw units have outages. And so now I'm offline, so I'm not getting the revenue. I may have sold my power forward, so now I have to buy it back from the market to cover that. And there was talk of $9,000 per megawatt hour prices in Texas. And so whether they could get that high, I mean, that was very extreme, but they could still be very high. But then I need to also spend on the facility because I got to bring the facility back online. And odds are, and you've heard a lot about winterization in Texas, the regulatory mandate aspect could come about to incur a lot of costs to make sure that this doesn't happen again. So you're right, they are definitely linked. And I think Texas is a very good recent example of both operational risk and market risk.
Thank you.
Thank you, Commissioner.
Mr. Craig, I'm sorry, go on.
Yeah, I also had some questions. Did I understand you to say that in this application that you did not include risks for clearing the market for this next 3-year period for purposes of the application?
No, so Commissioner, I think you're talking about the capacity, the risk of not clearing the capacity market. Mm-hmm. Yeah, so as we've looked at it for this first upcoming auction, we have assumed that we will clear all of the units. Now, the next 2 auctions will come as time goes on, and as time goes on, you will see changes within the market. And recall again that the capacity revenue really is designed, roughly speaking, to capture what's needed and then backs away the energy and ancillaries to leave you with what you need from capacity. And so as those energy prices change over time, they could change ultimately what's needed, and therefore what your limit is to what you can bid from a capacity perspective. So our risk of not clearing on the capacity markets is in our application is 0 for this upcoming auction, but then we do have some risk for the next 2 auctions.
It's, was suggested that, has PS Power ever objected to out-of-market subsidies for others in the past?
Absolutely, yes, we have.
Okay, can you,
Yeah.
Why, in this case, you?
Yes. So years ago, the LCAP proposal was put forth, which would have provided capacity to gas-fired plants within the state, and we did oppose that and thought that payment did not make sense, and frankly, would not be good for markets. And our view, frankly, if I step back from it all, we would prefer a solution where there would be a market solution to all of this. That we have said throughout all of this period that we believe that is the best answer. The market does not have a price for the attribute. It does not have a carbon-free price that is in place. And at some point, maybe with this new administration in Washington, that may happen, but it is not in place right now. So again, what I said before is true, that we are getting signals from the market that are telling us that we should close these plants because of that absence of that payment. And so what we really have done is just educated folks that is what the market is going to tell us to do. And that is our anticipation. But to the extent that they are bringing positive attributes, which I think in that instance, those gas plants were not bringing those attributes that didn't have a market price on them either. That's why we're coming forward and making sure folks are aware that that's our intention.
Right. So you're asking us to assess a market price for your particular attribute. With respect to that attribute, do you see the future? It seems that markets are moving, or companies are moving with ESG, and even with respect to our own policy in New Jersey and within PJM to value these carbon-free generation, which is generally more expensive, as you noted, and that there actually could be an upward motion in terms of compensation to those that provide those attributes, rather than the downside risk of your continuing operation, that you'll become more valuable as you will not have the gas, which is putting downward pressure on price, to bring those prices down. So should we not be offsetting the two with respect to, you're talking about, currently and within the future, past these next 3 years or whatever, a value moving forward to having nuclear available?
But the ZEC Act does account for that. So to the extent that there is a payment for the attribute, that is netted back. And so, look, we are still hopeful that there is like I said before, a longer term solution for these facilities. It is not ideal to be running long-term assets like these on such a short-term knowledge base with respect to how long they will be around. And so that challenges the operations, that challenges, as Commissioner Gordon talked about, some of the capital that you're going to deploy into these facilities, and really goes to the concept of, if I'm going to put capital in, I got to think about it as being recoverable over a shorter period of time, because I don't know that I'm going to continue to operate. But I think to your direct question, the ZEC Act does provide a mechanism to avoid double payments by virtue of a reduction in the ZEC to the extent that a payment is there for the attributes that they bring.
You brought up the subject of double payments, and it has been the contention of some that during deregulation that PS took on the obligation of these operational market risks, and that this is sort of a double dipping. How do you explain, or are you saying that the ZEC legislation has now shifted that obligation in part back to the ratepayer to bear that expense?
I don't think I would make that connection. I think that ultimately the company has a decision to make with respect to these units, and it will analyze the future revenues from the market, the costs, and the risks of operating. We have to continue to think about that within our overall decision-making process. And we'll do that and have done that. I'm sorry, Commissioner.
Okay.
Ultimately, that's a decision we have as a business related to the assets. The payment for the attribute isn't a payment to pay for the risks. Our decision will be informed by the risks, but the payment for the attribute doesn't pay for those risks. In fact, like I said before, the filing shows an amount north of what the board can do. So I think that that they're not directly related. As far as that prior legislation, that I know that ran through all the way up to the New Jersey Supreme Court and has been validated by this board and legislative bodies on the way, or judicial bodies, I guess I should say.
Not on that particular issue, but in terms of the act itself is what you're saying.
In terms of the Competitive Act back in around 2000s.
Are you finished, Commissioner? Mr. Gregg, before we go into breakout session to discuss confidential items and confidential items only, because everything else is in public session, I just want to ask you one direct question. And before I ask that, I do want to preface it by saying I don't disagree necessarily with the concept of a long-term solution so that periodically we don't have to go through this process. I think that has a lot of merit to it and something that we should explore. Number one. Number two, we've kind of danced around a little bit. And I think Commissioner Shivakula brought it up and some of my other colleagues brought it up. Bottom line, in your opinion, if PSEG does not get the maximum amount that we're allowed to award, will they close the plants? Yes or no?
The answer is yes, Commissioner.
Commissioner, you said yes.
The answer is yes.
Okay, yes. Thank you. All right. Tina, we're going to go into a breakout session to discuss some confidential items. And again, I want to reiterate to the public who's ever listening to this that only confidential items will be discussed, nothing else. So Tina, do what you have to do magically here. All right, if there's any question, don't allow them into the room. We have to protect the confidentiality.
Hello, this is Carrie Dorco, phone number last four digits 5319. I am an analyst at Monitoring Analytics, and I would like to be allowed into the confidential room.
Did you sign a non-disclosure form?
Yes, I did.
Okay.
Hi, this is Andrea Crane. I am 203-917-9709. I believe you mentioned that.
And who do you represent?
I'm consultant to Rate Counsel.
Okay.
Thank you.
All right, are we ready to go into the breakout session, Tina? site. All right, Ms. Park, is everybody back, I assume? Ms. Park, you had some follow-up redirect?
Yes, thank you, Mr. President. Mr. Craig, counsel for P3 earlier had asked you whether PSEG would consider an offer to purchase the nuclear plants. Do you recall that?
Yes.
Okay. And could you explain to the commission why the nuclear plants are not part of the strategic alternative that PSEG is undergoing currently?
Yeah, I mean, I think that two things come to mind in spite of the pure economic challenges. I do think that there is an ESG element that is beneficial related to them. And somebody asked a question before about the corporate citizenship aspect. And I do think that they're valuable assets to the state. And that maybe is an important element as well. I think they are critical to the state as outlined within the Energy Master Plan. And I think that they are a very, very important asset to the state and rightfully so from the attributes that they bring.
And earlier, there were some questions on the DECA Act that was referenced by some of the questioners. Could you explain, was that act considered by the legislature when the ZEC Act was passed?
Well, what consideration was given, I can't say for sure, but it certainly was law that was in existence at the time of the ZEC Act.
And perhaps I should have clarified, were those views on those stranded costs and other arguments considered
I'm going to object if we're allowed to make objections. I don't remember questions about DECA. I think we're beyond the scope of the cross-examination.
I would respond by saying that there were some questions about that, and I just wanted to clarify related to what was being considered before the legislature when they were considering the ZEC Act, and that those, Mr. Craig, I think, was testifying about that earlier. I'd like to just be able to direct on that issue.
Okay, I'm going to allow that. And then, Sarah, I'll give you an opportunity at the end of this cross if you want another question. Go on, Ms. Park.
Okay, thank you.
And you can answer the question, Mr. Craig. Do you remember it?
Yeah, yes, I believe that there was some consideration. I'd have to go back to the act. Maybe there may even be some mention in the preamble, but I can't say for sure.
Okay. And then I think the attorney from representing P3 asked you about other plants and compared our ability to manage costs versus those other plants. Could you explain how our costs could be different and what factors should be considered when considering the Salem and Hope Creek plants versus the plants that were being referred to by P3?
Well, I think there could be a host of differences. I think you would look at the technology. I think you would look at inclusion within a broader fleet. I think you would look at number of facilities. I think you would look at the local cost of operations, the kind of the localized costs of the area that you're in. So if you're in a lower cost area like Nebraska or Ohio, you could have a different outcome than if you were here in New Jersey. So those would be some things that I would think about.
Or things like union labor costs, for instance, would those be considerations that you would take into account? Yeah,
they would be. And existing contracts that are in place. So absolutely.
If you could give me a minute, Mr. President Fiordaliso. So, Mr. Craig, you were asked about the ROE figures with or without the ZECs. And without going into confidential information, if you could further elaborate on kind of that explanation and how that's significant in your consideration with respect to whether or not to cease operation of the plants.
Yeah, I think it provides just a little bit of context with respect to the overall outcomes of the operations. I think that as you take a look at the units without any ZEC payment, they are considerably negative. With a payment, just generally speaking, there would be a very suboptimal, well below any regulated utility returns that have been derived by utilities that are regulated by this BPU. So that's just one of the things that we tended to try to take a look at for context, was to make a determination as to even with a full ZEC what this would look like, and it would be I think upside down from the standpoint of the risk profile of a competitive nuclear facility compared to a regulated utility.
One additional question I had, there were a lot of questions on the capacity auctions and how that worked. Could you explain the timing of the capacity auctions and which ones we included risks for, just to further elaborate on that?
Yep, and maybe just a sentence to differentiate from the first ZEC period as well. In the first ZEC period, all the capacity auctions had happened, all the base residual auctions had happened in advance of this time. And in this instance, because of some of the changes, some of the MOPR and other changes that we've had within the capacity market, we are not at that place right now. So we have much more uncertainty around the amount of capacity revenue that we would see during this ZEC 3-year period. And what we have done within our application is included some risk related to the capacity auction solely for whether or not we would clear. And we have said that we do anticipate clearing in the first auction. So there is no risk related to that. But as we step forward into the following 2 auctions, there is still risk that remains by virtue of those auctions and the inputs, the parameters, the inputs, which some of which includes the forward price curve as well. So the uncertainty around whether or not we would be able to clear because of the MOPR has been applied to the following 2 auctions.
Thank you, Mr. Craig. So just really quickly, if you could walk me specifically through the timing of the capacity auction and what times they cover. So for example, you can give us a sense of what time period will the upcoming capacity auction cover?
Yeah, so the upcoming capacity auction covers the first of the 3 years of the ZEC 2 period. So that's the 22 to 23 period. And then in roughly 6-month increments, we will have the other 2 auctions that will cover the 23-24 period and the 24-25 period.
You just give me 1 more minute, Mr. Fripp. I have no further questions. Thank you.
Thank you, Ms. Park. Sarah, did you want to ask a question?
Thank you, Mr. President. I have no questions.
Thank you. Lawyer for P3, you were mentioned a number of times. Do you have any additional questions?
No further questions, Mr. President. Thank you.
Thank you. Okay. As we continue to move along, because I assumed most of the questions were going to be for Mr. Craig and so on, and that the remaining will move along a little bit more quickly. Otherwise, we'll be here until 4th of July. So, and then we would fit right in my background.
Mr. President, PSEG calls its next witness, Mr. Carl Fricker.
Okay, Mr. Fricker.
Carl, you on, Carl?
Yes, good morning, everyone.
Good morning. And court reporter, would you swear the witness in, please?
If you would raise your right hand, do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes.
Thank you.
Good morning, Mr. Fricker.
Good morning.
Would you please state your full name and job title?
Yes, my name is Carl Fricker, and I'm the Vice President, Power Operations Support for PSEG Power.
And have you submitted written direct testimony in this case?
Yes, I have.
Do you have any corrections to that testimony?
No, I do not.
And this was the testimony submitted on January 29th, 2021, correct?
That's correct.
And if I asked you the questions posed in that written testimony this morning, would your answers be the same?
Yes, they would.
Thank you. And Mr. Fricker, you also answered some written cross-examination questions in this case that were posed by intervener P3 as well as by board staff?
For my testimony was from P3 only.
Thank
yes.
you. Thank you. Okay. And if the questions in those written cross-examination questions were put to you this morning, would your answers be the same as they were in those written responses?
Yes, they would.
Mr. President, I just request that for identification purposes, as we did with Mr. Craig, I would request that we mark for identification Mr. Fricker's direct testimony as Exhibit P4, I believe, that we're up to. And Mr. Fricker's responses to P3's written cross-examination questions as Exhibit P5.
Without objection? So marked.
Thank you. Mr. President, Mr. Fricker is available for cross-examination.
Very good. And before we take a vote, how many folks believe Matt looks a lot better with a beard?
Not looking good, Mr. President.
All right.
So noted.
I voted for you, Matt.
Okay. We have to inject a little levity.
Thank
you. Very good. Market monitor questions.
No questions, Your Honor.
Thank you. P3 questions.
No questions, Your Honor.
Very good. Thank you. New Jersey large energy users.
No questions, Mr. President.
You know, I like you more and more, Mr. Goldenberg.
It takes a lot to earn your love, Mr. President.
Rate council.
It appears we lost Sarah, but we have no questions for Mr. Fricker. Thank you.
Oh, sorry.
Thank you,
No
Director.
questions.
Board staff.
No questions, Mr. President.
Okay, now, Mr. Fricker, are you exhausted from this ordeal yet?
Am I exhausted?
Yeah.
I was ready for some questions, so I'm not exhausted.
Okay. Well, thank you for your time, sir. PSEG, any additional witnesses?
No, Your Honor.
Additional witnesses, Your Honor.
Okay, very good. Mr. Fricker, thank you for your time.
Thank you.
Market monitor, please call your witness or witness.
The market monitor calls Dr. Joseph Bowring.
Okay. And would the court reporter please swear him in, please?
I'm sorry, who was I swearing in?
Dr. Joseph Bowring.
Okay. you could raise your right hand. Do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes.
Thank you.
Yes.
Mr. Bowring, would you please state your name and affiliation?
Yes, I'm Joseph Bowring. I'm the independent market monitor for PJM. Can you hear
Thank
me
you,
okay?
sir. Okay, let's move on. Mr. Mays?
Yes. The market monitor submitted direct testimony in the form of a report on January 29th, 2021, correct?
Yes.
That report was prepared under your supervision, correct?
Yes.
Do you have any changes to that testimony?
As we indicated in the response to the last written cross-examination question, we revised the first table as explained in detail in the answer to that question.
And other than that, Dr. Bowring, is your testimony the same today as it was when the report was filed?
Yes.
I would like to mark Dr. Bowring's direct testimony as IMM1.
Without objection? So marked.
I would like to mark Dr. Bowring's written responses to cross-examination questions from PSEG dated February 26, 2021 as IMM2.
Without objection?
Would now like to make Dr. Bowring available for cross.
Thank you. PSEG?
Yes, Mr. President. Thank you. Good afternoon, Mr. Bowring. My name is Matthew Price, and I represent PSEG, and I'll be conducting your cross-examination today. Now, Mr.
Good
Bowring.
morning.
Good morning. Yes, not quite afternoon yet, just feels like it. Mr. Bowring, you opposed New Jersey's decision to adopt the ZEC program, didn't you?
Yes.
And in fact, when legislation was pending before the New Jersey legislature, you submitted a report opposing the bill, didn't you?
Yes.
You told the legislature that the PJM market was a competitive market in which investors make decisions about which generating plants to retire based on market incentives. Do you recall that?
Yes.
And by market incentives, you mean the price signals provided by the PJM markets, correct?
Yes.
And you oppose the ZEC program because you think the competition would be more effective than regulation in ensuring efficient outcomes, correct?
Yes.
And that by providing subsidies, the ZEC program was contrary to the principles of the competitive market, correct?
Yes.
But the New Jersey legislature disagreed with your policy judgment, didn't it?
Yes.
And that's because the legislature recognized that the retirement of the nuclear power plants would result in an increase in air emissions due to increased reliance on fossil fuel generation, correct?
You're asking the witness to speculate.
Who made the objection, please?
Jeff Mays.
Well, I was quoting from a finding in the legislation.
Right, but you're asking the witness to speculate why the legislature did things, and while he certainly has his opinion. But
Yeah, Mr. Price, move on. I agree with Mr. Mays. Somebody please put their computer on mute or something. I'm hearing like typing or something.
Do you agree, Mr. Bowring, that the retirement of nuclear power generation would result in an increase in air emissions due to the increased reliance on fossil fuel generation?
I have not analyzed that question.
Now, you not only opposed the New Jersey ZEC program, but also the Illinois ZEC program, didn't you?
Yes.
And also the New York ZEC program, correct?
Yes. We are consistent.
And you were also a supporter of FERC's expanded minimum offer price rule for PJM, correct?
It's not exactly true. So you may have read our recent comments to the board on on the reliability docket. So we recognize that the FERC makes these decisions, and we spelled out our view of what we think should happen going forward, given FERC's likely decision on this.
But you did.
And in short, FERC has changed its mind about more.
But you did support expanding the minimum offer price rule to cover state subsidized resources, didn't you?
Yes, so we believe that that it's important that the wholesale power market be insulated to the extent possible from state subsidies, but we also recognize that the commission is now apparently about to decide that the MOPR rule is no longer going to be in place. And as you probably know from our recently filed comments, we are recommending, given that we figure out a way for both the states and the federal government's separate authorities to be recognized. I mean, the issue all along has been that the federal government wants a power market which is competitive and insulated from subsidies, and on the other hand, the states have the ultimate authority over resources in each individual state. So those are overlapping and apparently now inconsistent authorities. So the challenge is to make them work together, and that's the challenge we all face going forward.
Mr. Bowring, you stated that FERC would be eliminating the MOPR. Do you know that?
I know what I read in the trade press, what I read from public statements from the chair of the commission. So I think it's highly likely. Of course, I don't know what is going to happen in the future any more than anybody else does.
You're just speculating that in your view is likely, correct?
It's not. I'm not speculating. I'm basing my opinion on what is known and what the public statements have been by those who make the decisions.
Back in 2017, when the legislature was considering the ZEC Act, you stated that in your view, there's no evidence that PSEG's nuclear plants are uneconomic and facing a retirement signal from the PJM markets. Isn't that right?
Yes.
And in 2019, in the first ZEC proceeding, you told the board that Hope Creek, Salem 1 and Salem 2 are expected to more than cover their avoidable costs over the next 3 years, and that as a result, none of the units meets the standard for a subsidy under the ZEC program. Do you recall that?
Yes.
And you also said in 2019 during the first ZEC proceeding that the nuclear power plants are expected to fully cover their costs and risks, correct?
Yes.
But the board disagreed with you in the ZEC 1 proceeding, didn't it?
Yes.
And you're making the same argument again, but let me ask you about something that has changed between the first ZEC proceeding and today. Would you agree that forward energy prices have fallen since the ZEC 1 application period?
Yes, and real-time prices have fallen as well. In 2020, we saw the lowest prices in the history of PJM.
Do you have any sense of how much forward prices have dropped over the last 3 years?
I don't know off the top of my head.
Okay. Let me show you this demonstrative, which we sent to you on Thursday. And I'm going to try to share my screen here, if you'll bear with me for a moment. Are you able to see that that graph, Mr. Bowring?
Yes.
Okay, and this graph depicts the forward curves over the last 10 years, right?
So it would appear.
Now, in December 2018, prices for the 2021 delivery year were about $28 or so, weren't they?
I don't know. I mean, I'm happy to, if you want to ask me sort of detailed questions about the boards, I'm happy to respond in writing on. If that's what your slide says, and you're saying that it's correct, then that's fine.
Okay. Well, if you look at, I'll move on. In written cross-examination, PSEG asked you whether you agreed that forward energy prices in PJM have generally come down over time in the past 10 years, and you responded no. Do you recall that answer?
Let me bring up I have my answers here somewhere. Hang on a sec. So what question was that?
I can put it on the screen for you if you'd like.
Just tell me what question it was. I have it, Andy.
It was on page 10 of your answers.
Oh, right, over the last 10 years. So forward prices have gone up and down, and they continue to go up and down. Was my point. So just saying that they have always come down. I mean, I don't know what the basis for your figure is, but I think as your witness said a moment ago, forward prices go up and down. So they go up and down within a range, but they also go up and down. So saying that they've simply come down steadily is not accurate.
Looking at the graph on the screen, would you say that there's a general trend in forward prices falling over the last 10 years?
Well, I'm not going to base my conclusion on your figure. My conclusion is based on our look at the data, and I would say that prices have gone up and down. Although I would also say, as you know, that real-time prices have absolutely come down significantly. 2016 was a very low year. 2020 was a very low year. But prices just don't go in one direction only. And I expect that I believe that there are upward forces on the energy market, and it's hard to see how the energy market prices are going to go much lower than where they are right now.
Stop sharing that. Now, in the report you submitted in this case, you stated that forward energy prices as of January 4th, 2021 were higher than the ones as of September 30th, 2020, which was the last update provided by PSEG. Do you recall that?
I'm sorry, the question was about what? Which answer?
Forward energy prices as of January 4th, 2021 were higher than the ones as
of right. So per our report. So what you're asking?
Yes.
Yes, the answer is yes.
Forward energy prices as of Thursday have fallen compared to those on January 4th, haven't they?
I haven't looked at them, but it's certainly possible.
Let me show you this demonstrative, which again, we supplied to you on Thursday. So this shows the PICO planning year 23-24 and 24-25 averaged round the clock forward prices. And can you see that?
I can.
And you see that this line here marks the September 30th date, correct?
That's what it says, yes.
And this line here marks the January 4th date, correct?
Yes.
And this line here is March 3rd, correct?
That's what it says.
And you can see that prices have fallen since January 4th, correct?
That's what that figure shows, yes.
And they're even a little bit below than what they were on September 30th, correct?
That's what the figure shows. As you know, that's not necessarily the correct indication, but nonetheless, that's what your figure shows. So
I'm sorry,
and I happily agree that forward prices go up and down. Clearly, they do.
Now, in your report, you identified some changes to the market rules that FERC has ordered but not yet implemented. Do you recall that?
Yes.
Now, traders buy and sell forward energy contracts, don't they?
Yes.
And when they decide on their bid and ask prices for those, wouldn't you agree that it's likely that they evaluate all the information known to them?
I'm sure they evaluate what's known to them, although as I indicated in my responses, it's unknown how they weight them. So I don't pretend to be in traders' heads or know how they're doing it, but it's clearly the case that forward curves are a result of energy traders trading based on whatever they're thinking about.
But it wouldn't make sense for them to ignore available market information, would it?
Nope, it would not.
So for example, if FERC decided to change the market rules, but the change wasn't implemented yet, you'd expect that an energy trader would still know that information and take it into account when trading forward energy contracts, correct?
Well, what I think they would do is they would be aware of what the decision's made and decide how to weight it. So, for example, the ORDC reference that I make, which is going to occur at the moment, if things go forward as they've been stated by the Commission effective June 1st of next year, traders are usually skeptical, although again, I don't want to pretend to be putting myself in the mind of a trader, but we have no idea how they weight that. And typically traders weight what's more current information currently affecting market prices than they do farther up. But again, the weights are unknown. So I don't know how traders are going to account for known changes that are occurring in the future.
Do you think you know better than the market does what the expected effects of FERC rule changes will be on energy prices?
No, I don't.
Okay. I'd like to ask you next about net avoidable costs. Your position is that net avoidable costs is the relevant metric for evaluating whether a plant is fully recovering its costs and risks. Is that right?
It's the right metric for determining whether, in economics, whether a unit is getting a retirement signal from the market. And therefore, that's the relevant definition of costs and risk for evaluating that question.
Now, net avoidable costs include, for example, operation and maintenance expense, but does not include the return of or on capital. Is that right?
Yes.
So if a plant expects to just break even on its going forward costs, but expects to earn no return, the net avoidable cost metric would say that the plant should remain in operation. Is that right?
The net avoidable. So your hypothetical is that it's zero?
My hypothetical is that the plant will just cover its going forward costs, but earn no return.
So therefore, the net avoidable cost is zero in your hypothetical. Just wanted to be clear. Is that true?
That's right. That's right.
So, I mean, that's obviously the razor edge. What I'm saying is that if it's positive, the signal is to stay in business. If it's negative, the signal is to go out of business. And it's very unlikely it would ever end up at zero. It's zero. It's zero. It's I would say the signal is to stay in business, but it never is at zero, and it's not at zero now.
Suppose there was a risk of a major loss of the kind that we've seen some companies take in Texas. And otherwise the net avoidable cost was zero, right? Your expected outcome was that you would just recover your costs, but there was this risk of a major loss. Would you say the plant should still stay open because it's breaking even on a cost basis, even though it
depends on what you mean by risk. So if you're talking about something that can occur with a known probability, then that would be taken account of. And similarly, the probability that the opposite will occur. So the idea that somehow customers in New Jersey should guarantee PSE&G that will always be held harmless from any risk. This is not consistent with the way the market operates, and particularly given that the extra money won't be paid back, not consistent with a rational approach to this process.
The ZEC Act describes market risk, correct, Mr. Bowring?
It does what?
It describes market risk?
It refers to it, yes.
The net avoidable cost metric doesn't include market risks as that term is defined in the ZEC Act, does it?
The net avoidable cost by itself does not.
And the ZEC Act describes operational risk, correct?
It refers to it, yes.
But the net avoidable cost metric does not include operational risk as that term is described in the ZEC Act, does it?
Just so we're clear, our analysis does include risk, but net avoidable cost analysis taken by itself without reference to risk wouldn't include it, and with reference to risk, it would include it. Both operational and market risk.
Now, the ZEC Act defines operational risks to include the risk that operating costs will be higher than anticipated because of new regulatory mandates or equipment failures. You agree, don't you, that nuclear plants can face new regulatory mandates that impose additional costs?
So if you look at the history of operating costs as submitted by nuclear power plants across the country to EUCG, the industry organization, you'll see that those costs bumped up after Fukushima and have come down steadily since then. So those costs can go up and down, and they've been on a pretty steady downward trend.
Mm-hmm. But you
so
agree
of course, costs can go up and costs can go down.
Mm-hmm. But you agree that nuclear plants do face the risk of new regulatory mandates, don't you?
I think we all face that risk.
And you also agree that a major component on a nuclear plant could break, right?
A component could break, yes.
And you would also agree, I would assume, that once a nuclear plant stops operating, it no longer faces the risk of new regulatory mandates concerning its operation, correct?
Not concerning its operation if it's not operating. Good point, yes.
And once it ceases operation, it no longer faces the risk that costs could increase as a result of equipment failures, correct?
Generally true. I mean, there's a decommissioning process, as you're aware. So, but in general, if it's not operating, it's not facing operational risks. I would certainly agree with that.
So operational risks can be avoided by retirement, correct?
Yes.
And is the same true of market risks? Market risks can be avoided by retirement?
As a general matter, if you're not selling into a market, you're not facing any market-related risk.
I had, I think, just one more question, but then I want to just refer to my notes. Your report analyzes the impact of ZEC plant retirements on fuel diversity, but your report considers the impact only on fuel diversity across all of PJM. Is that right?
Yes. Well, I'm not sure I would say only, but that's how it's calculated. And I mean, it's a metric we calculate routinely in the State of the Market report. And we simply did it showing what the impact would be, both if the nuclear resources were not displaced by a particular technology, and then if it were replaced by gas-fired units. I'm sorry, to entirely answer your question, over the entire PJM footprint, that's correct.
But your report does not analyze the impact of ZEC plant retirements on fuel diversity in New Jersey specifically, does it?
No, it does not.
Isn't it true that if the ZEC plants retired, in-state generation would be predominantly natural gas?
I don't recall, but that sounds plausible.
Are you aware of the statement in the Levitan report that the retirement of all 3 nuclear units would increase the share of in-state natural gas generation to as much as 90%?
I'm not aware of that, but that doesn't mean that that's what the output would be. I mean, the fact that you have capacity doesn't mean that that's the most economic source, so that's where energy is going to be generated. This has been made much of, although I think too much has been made of it. Most 75% or more of the units in the generation queue are renewables. Now, while I think that's overstating significantly the amount that's likely to come on, we are in the current state of the market report evaluating displacement of resources, retiring resources by renewables as well as gas. So the fact that the installed capacity in New Jersey has some particular characteristics does not mean that that's what's going to displace, would displace the output of nuclear units should they retire. It's a more complicated analysis, as I'm sure you're aware.
I'm sure it's much more complicated, but at the end of the day, you would agree, wouldn't you, that if the ZEC plants retired, you would have a large increase in natural gas generation to replace those the nuclear plant's output?
I don't know exactly what it would be. That would be the result of an analysis that we haven't done.
Okay, thank you very much. I have no further questions.
Thank you, Mr. Price. P3, do you have any questions for the market monitor?
No questions, Your Honor.
Thank you. Large energy users, any questions for the market monitor?
No questions.
Thank you. Rate Counsel, any questions?
Yeah, just quickly, Your Honor.
Sure.
Dr. Bowring, if a generator in PJM decides that it wants to shut down one of its plants, may it simply do so, or is there a process that it has to go through at PJM before it may cease operations?
Right. So actually, there are a couple steps. One is that when a unit wants to retire, or it has to file with PJM and has to indicate that it intends to. And there are at least 2 pieces of analysis that are done. One is that PJM does a reliability analysis and determines whether the system reliability will be maintained in the absence of that unit. If it thinks it is, it permits it. If it does not, it starts what's called an RMR process to ensure that reliability is maintained while the unit retires. And then secondly, of course, we the market monitor, are required to do a market power analysis. So there's a reliability analysis done by PJM and the market power analysis done by the market monitor unit.
So if the retirement of a plant would impact the reliability in a portion of PJM, then there would be a process that would ensue that would make sure that reliability was not jeopardized. Is that correct?
Yes.
Thank you. That's all I have.
Thank you, Director. Board staff, any questions?
No questions, Mr. President.
Thank you. Joe, I do have a question. And
yes, sir.
Just straightforward. It's good seeing you, by the way. Just thank you. Just really straightforward as I presented my question to PSEG. Do you agree with the Levitan report?
So the short answer is no.
Okay, so you don't agree with the conclusion of the Levitan report?
Correct.
All right. That being said, are you saying that no subsidy is necessary?
Yes.
Okay, thank you. Any of my colleagues have any questions for Mr. Brown?
Mr. President, Mr. Bowring, my question to you is that you see the different states and their regulatory bodies in part of the PJM territory, and have you come across anywhere that in a competitive market-based generation, ratepayers subsidizing because of operational risks or market risks. Is that a common practice or just is recent?
It's very recent. So there are subsidies of various kinds. As we know from all the MOPR proceedings, there are subsidies for relatively small amounts of renewable energy. There are subsidies in Illinois for one nuclear power plant. There are subsidies which I think were just repealed or in the process of being repealed in Ohio for 2 nuclear power plants. So it's not, it has happened elsewhere, but it's a relatively recent phenomenon as a result, I think, primarily of downward pressure on real-time energy market prices.
How does PJM handle if one of the generating units is shut down? I mean, they are totally responsible for the reliability of the entire market, PJM market, and they replace that with something else. It doesn't have to be from New Jersey. Is that correct?
Correct. So PJM routinely deals with retirements of units. If you look at the maps in the State of the Market Report, there's been 20, 30,000 megawatts that have retired over recent years, and PJM has managed the reliability of the system through all that. As I said, they do a reliability analysis for each proposed retirement to ensure reliability. In a small number of cases, that's required keeping the units around a little bit longer under a so-called RMR contract. But in general, that has not been the case. In general, PJM has managed the reliability of the system given retirements without having to do that.
Are you familiar with the Energy Master Plan of 2018-19?
Generally, not in detail, but generally, yes.
Yeah, one of the requirements, high level, is that New Jersey has to have clean energy, 50% clean energy by 2030 and 100% by 2050. So shutting down the nuclear power plant does not necessarily mean that you're going to replace that with natural gas. There could be offshore wind, it could be solar, it could be some other renewable energy source. Is that possible?
Yes.
So another thing I probably heard earlier that even if you get $10 ZEC, that's not enough. It has to be $18 ZEC. Otherwise, there is a risk potential of closing down the units. And what do you say to that?
So first of all, PS, if their numbers are to be believed, has demonstrated that if they don't receive $18, they're going to get a retirement signal from the market. If their net avoidable costs are truly $18, or truly require a payment of $18, then what they're saying is the market signal is going to retire. So, I mean, they're clearly not saying that. That's not what they said today. That's not what they've said elsewhere. So I think it's important in thinking about risk that one think about the fact that it's a distribution, and our evaluation of risk in this case is that the net risk is on the negative side, not the positive side, that there are clearly one has to think about higher costs and lower revenues, but also the reverse. And we don't think it's the job of the customers in a market to guarantee that nothing bad will happen, or that the company will be held harmless from that. And particularly in the case when those excess revenues are not paid back in the event that those negative consequences don't occur. So we think a fair evaluation of risk does not result in a positive risk added, results in a negative one. But we did not actually subtract from the net avoidable cost for that purpose.
Another thing I heard earlier is that the nuclear fuel cost in terms of fuel waste, I mean, it's being stored on site, right? Because there is no solution to go to Yucca Mountain. And so why should that increase the cost of a nuclear power plant operation? I know the continuous generation will produce more waste, and it is going to be stored in New Jersey if it is produced in New Jersey.
Right. So it is true that there is waste produced by nuclear power plants that it's not clear what's going to happen to it. I'm not sure what the question was exactly. Sorry, sir.
No, I'm just saying, they were saying that, because of the Nuclear Waste Act and monies are being collected for nuclear waste, and I think we need to account for that. That was the statement made earlier. Yeah.
Right. So, a couple of things that doesn't take account of. First of all, there is no ongoing charge for the spent fuel, as we know. Secondly, we don't know what is going to happen in the longer run. That is, if and when eventually these units are retired, it's not clear that PSE&G or shareholders would pay those costs. The typical process now is to sell the retired unit and the decommissioning revenues to a third party who handles all that. So we certainly don't know that the spent fuel costs are an ongoing cost. And in fact, we know they're not an ongoing cost, and we don't know how they'll be treated in the future, which is why we left them out of the net avoidable cost analysis.
Thank you, Dr. Bowring. No more questions, Mr. President.
Thank you.
Bob?
Yes. Good morning, Dr. Bowring. Nice to see you.
Yes, sir.
The Rate Council just posed some questions about the process for retiring a nuclear plant. Is another option the sale of these plants to some other entity? Is that a viable option? Are there regulatory impediments to that? I mean, could theoretically PS decide to sell the plants to another entity, a public sector entity, or another private sector organization?
Yes, logically that's possible. As we know, NRG as a merchant entity, bought a nuclear power plant in Texas. As we know from public announcements, Exelon is spinning off its nuclear plants into a merchant company. So it is logically possible for a non-regulated company to own nuclear assets, if that's what you're asking. And it's logically possible that any assets could be sold.
So there's no federal regulatory impediment to doing that. I mean, there's a process to transfer the license to some other entity.
As far as I know, there is no impediment. There is no insurmountable impediments, I should say. There are always regulatory rules, but no barriers to doing that.
Okay. In your report, you focused much attention on public services presentation of costs and the risk adders. Could you, for the benefit of the record and those who have not read the report, summarize your assessment of the costs presented as that the public service did, to the extent that you can do that in an open session?
Yeah, so I just need to think about what's confidential, what's not. So let me just say in summary, we think that PS overstated costs. They included overheads, which we don't think should have been included. Obviously, we just talked about spent fuel, and nowhere in, for example, PSE&G's own financial reporting 10Ks do they include spent fuel as a cost. So I want to be careful about getting into any more specifics on the cost, but I would, and I mean, I guess the most fundamental thing which has been raised again, and I want to be careful about confidentiality, is the question of risk. So we evaluated risk very differently than did PSE&G. PSEG, sorry.
Okay. Thank you, Mr. President.
Any other questions for Dr. Bowring?
I do.
Okay.
Dr. Bowring, you talk a lot about installed capacity, which we know does not equate to energy. Have you done any studies about renewable subsidies relative to capacity factor?
I'm thinking about that. So we know that the capacity factor for wind and solar is, say, on an annual basis in the 30% range. We certainly know that renewables are being subsidized. So renewables produce at a much lower capacity factor than does a nuclear plant, if that's what you're asking me. I think the PSE&G representative testified earlier incorrectly that the annualized capacity factor accounting for refueling years and non-refueling years is about 90%. And compare that to solar and wind, which are in the 30% range. Am I answering your question? Sorry.
Oh, no, I know what the capacity factors
Oh,
are.
I'm sorry.
but
I'm sorry.
Many studies is relative to the subsidies for these other, for all renewables.
No, I don't think so. If I'm understanding your question, I don't think we've done.
I'm trying to find the value of the actual capacity factor.
Right. So, I mean, I think what you're asking me, and I'm not sure I've done the analysis, but I apologize for not having done it, would be the dollars per megawatt hour produced in terms of the subsidy. I have not done that, but we could do that very easily and get it in if that's appropriate.
Would think that would be very useful because you'd say, installed capacity that, wind and solar can replace the base load of the nuclear. And I want to try to figure what that would cost and how much would have to be installed to replace that.
Sure. And so just to be clear, I'm not saying I know if the nuclear plants were to close, I'm not saying I know how they would be replaced. I'm saying it's just a mistake to say that to focus solely on the installed capacity in New Jersey. It's a more complicated question, and I'm not saying I know the answer, but I could certainly give you an answer to that specific question.
That'd be great. Thank you very much.
Thank you.
Joe, just one additional question, and it kind
Yes,
of
sir.
builds on what Mariana was just asking. We talk a lot about needing bridges to get to our ultimate goal of 2050, which is 100% renewable energy. From your expertise and your knowledge, if the nuclear plants were to shut down today, and of course it would take a while for that to actually happen, as we all know. I know what you said, but is there anything that you can think of, in addition to natural gas, that could be a bridge, an additional bridge, to our ultimate goal in 2050?
I think one of the key things about all this is we don't know, and the rate of technological change is incredibly rapid currently for renewables, for storage, for all the things in the generation or supply side. So I don't know. I don't pretend to know the answer to that. But
okay.
What I can say is that I'm sure it will surprise us when it occurs. That much we can say.
Right, and I agree with you. Things are changing so rapidly that we're talking today, and tomorrow there might be something we're not even thinking about today.
Right.
And
we're talking about hydrogen, different forms of batteries, or just a million things. Right. I'm sorry to interrupt. Sorry, sir.
No. I'm agreeing with you that that's certainly a very strong possibility. But we also have to keep in mind that our primary responsibility is one whereby we provide, or part of our mission is reliable service to the consumers of the state of New Jersey. And so we have to look at all factors. We have to look at all factors that contribute to that reliability and so on. So whether those include nuclear, natural gas, renewable energy, whatever it might include. So, and you would agree with that, I assume, that's our primary responsibility, right? So,
yes.
Okay, fine.
I have one question, but
yes?
If you, for the answer or whatever, need to go into confidential section, just let me know. It has to do with the representation as to ROEs in a regulated versus deregulated environment. Do you have an opinion as to how this board should consider that representation as made by PS in this proceeding?
Yes, so I thought the testimony was very interesting, particularly given that the target that kept being held up was the rate of return being granted to regulated utilities. Well, PSEG Generation obviously is not a regulated utility. It's a market company, and I don't recall them offering to return revenues when rates of return were well above what they would receive from as a regulated utility. So earned rates of return on equity in a market are a function of market dynamics. As much as someone may want to return to regulation now and receive regulated rates of return, I don't think that's the right benchmark. I think the benchmark for retire or not retire is as indicated as net avoidable costs. You know, the PS has received stranded cost payments for some of these plants in the past. And in addition, since our analysis, our net avoidable cost analysis is explicitly including capital expenditures as a one-year expense, the notion that that's not providing adequate return on equity, I think, is highly questionable. So I think really those are the three parts of my answer. And actually, I wasn't sure who was asking the question. I decided to answer first and ask afterwards, so that no one would think I was changing my answer depending on who was asking it. So, so who was actually asking that question? I'm sorry.
Yes, I was, and yes, you answered it.
Oh, I'm sorry, Commissioner. Thanks.
Anything else, Diane? Mr. Mays, any cross?
It's Mr. Price, President Fiordaliso. Yes, I do have a few additional cross questions, if that's all right. Mr. Bowring, a moment ago you were asked
I'm
about.
sorry, Mr. Price. Go on.
Okay, thank you. Mr. Bowring, a moment ago you were asked about the regulated utility ROE. Do merchant generators generally seek an ROE in excess of what a regulated utility would earn?
Depends on what you mean by seek. I'm sure everyone would like a higher rate of return on equity. The question is, what do they actually achieve, and what are they willing to achieve given the way that the markets actually operate?
Okay. You stated that you evaluated risk differently from PSEG. Ultimately, is it your decision as to how to weigh risks here and make a decision about whether to shut plants down or keep them in operation?
No, obviously we are not the decision maker. We are one of many sources of information to the board that has to make this decision. We do not evaluate. We don't make the decision very clearly, very obviously.
You were asked about whether it is possible for the plants to be sold, and you said it was logically possible. Have a number of nuclear power plants across the country retired in recent years?
Some have, yes.
Do you know why they haven't been sold instead of retiring?
I do not know.
Have you seen significant market interest in nuclear plants?
I'm not sure what you mean by that.
Have you seen, many buyers lining up to buy nuclear plants, Mr. Bowring?
Let me try to answer. So there are nuclear plants, they're owned by companies, and the market is continuing to invest in those companies, if that's what you mean. So have I shown an interest in buying nuclear plants? I haven't evaluated that.
Okay. You were asked about whether there is a way to replace the output of nuclear power. Is there any way to immediately replace the output of nuclear power with offshore wind or solar in the next 3 years?
Certainly not with offshore wind, given what we know about the time period to build offshore wind and connect it through transmission.
And last, you were asked a number of questions about the process for retirement in PJM and the need to ensure reliability. If the retirement of the nuclear plants would increase costs to New Jersey customers, would PJM's retirement process take that into consideration?
So the PJM retirement analysis has nothing to do with cost. It has to do entirely with reliability.
Does it have anything to do with emissions?
No.
Does it have anything to do with fuel diversity in New Jersey?
So let me repeat. No. So the answer is no. And so the answer in general is PJM's reliability analysis is about the reliability of the system, the reliable operation of the system, and that's all it's about.
One last question. Isn't it true that some plants have been sold for the purpose of shutting down? Some nuclear plants.
I'm not sure.
For the purpose of shutting down?
I'm not sure what you mean by that. So it is true that when an owner decides to shut down a unit, it will, the recent practice has been to sell it to a company who will manage that. It will take the decommissioning revenues and manage that process, if that's what you mean.
Yeah, that is what I meant. Thank you. Let me just take one moment here and just look at my notes, if I may, Mr. President.
Sure, Mr. Price.
Okay, I have nothing further. Thank you very much.
Thank you, Mr. Price. Mr. Mays?
I'd like 5 minutes to confer with my client, or we could break for lunch, whatever you think is appropriate.
Are you getting hungry, Mr. Mays?
No, but I'm aware my client tends to run out of energy.
Is he getting hungry?
I'm not, I'm fine.
All right, so I think that's a good point, Mr. Mays. Why don't we break for lunch? And why don't we all return here at 12:45? And then I'll try to wrap this up. Okay.
Sorry, can I ask your tech people just a question? So should we all log off and then log back in?
Very good question. I was just going to ask the same question, Joe. Thank you. Kevin, what do we do here?
It's up to you. You can log in and log back out. We will just turn off the stream, so it will just say, please stand by. And you can feel free to leave and rejoin, or to just turn your camera and microphone off.
Oh, okay. Does that work, Joe, everybody?
Sure, it's fine with me.
Okay, so we'll see you promptly at 12:45.
Thank you.
Okay. I assume we're all here. Mr. Mays, I'll off with you, sir.
Yes, Your Honor, I have conferred with my client and we do not require any redirect.
Okay, very good. I want to thank you, Mr. Bowring, for being here with us.
Thank you, sir.
Can I ask one more last question before he's done?
Go on.
Sorry to do this to you, Joe. Just one
That's
last question. So I would imagine that there would be market implications should PS decide not to move forward with operating their plants, close the plants, should they not receive the ZEC. Is there market implications, do you find, due to the fact that at this point they will not say whether or not they would continue to operate even if they did receive the ZEC?
Right. So what, if I'm understanding the question, regardless of what they decide to do, to the extent it is unclear to the market or even clear, it's going to have an effect. So if they decide to remain in operation, it will have an effect on energy prices, capacity prices, and others' expectations. If they decide not to continue to operate, that will have an effect. And if they're not clear, that will also have an effect, but by creating some uncertainty for those who might be or who are making their own independent decisions about whether to participate and how in the energy and capacity markets. Am I answering your question?
Yeah, I just wanted to know whether there would be, I'm looking to see why there would be any, if there would be any impediment to them, making that, they were clear on representing that they would close, why they wouldn't, if there was, some downside or market reasons for them not saying that they would remain open. So.
I don't see it.
Okay, thank you, Commissioner. Mr. Mays, any additional witnesses?
No additional witnesses, Your Honor.
I'm sorry.
No additional witnesses.
Thank you. Okay, P3, would you please call your witness or witnesses?
Mr. President, we don't have a witness.
Okay, that was easy. New Jersey large energy users. Witnesses?
To continue on a roll with you, Mr. President, we have no witnesses.
You know, Steve, I'm starting to like you more and more.
I really wish.
Is that even possible?
My pithy comebacks are with fingers crossed, so I'm going to knock it off right now.
All right. Great counsel, would you please present your witness?
Aloha, President Fiordaliso. It's Brian Littman, and I'm going to call our first witness is going to be Andrea Crane.
Okay. Hi, Brian. How you doing?
All right. How are you?
Good, thank you.
Good to see you all.
It's always good to see you. And would the court reporter please swear in Ms. Crane?
If you could raise your right hand. Do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
Yes, I do.
And would you state your name and affiliation, please, for the record?
Yes, my name is Andrea Crane, C-R-A-N-E. I am president of the Columbia Group, and I'm testifying on behalf of Rate Counsel today.
Thank you. Mr. Lippman?
Thank you, President Fiordaliso. Ms. Crane, did you provide testimony in this matter?
Yes, I did.
And if I were to, do you have any corrections to that testimony?
The only correction I have was addressed in the last written cross-examination question from PSE&G. They indicated in their, or asked me in their question about a table that was on page 12 of my testimony, and I had flipped the operating unit. So that was corrected in that data request response, as well as I made 3 additional numerical changes that resulted from that table being corrected.
And other than that, there's no other corrections, correct?
No other corrections, correct?
And if I were to ask you those questions today, you would answer them the same, correct?
Yes.
And you referenced cross-examination. You answered cross-examination questions from PSE&G?
Yes, I did.
I'm sorry, PSEG?
Yes.
And do you have any corrections to those?
No.
So I would move I guess RC1, Ms. Crane's testimony, and RC2, the answers to written cross. And with that, I will make.
Without objection,
No objection.
so marked.
With that, I make Ms. Crane available for cross-examination.
Thank you, Mr. Lippman. Matt Weissman, first of all, I want you to know that my unofficial poll regarding your beard is favorable.
Yeah.
Well, you know, I'm beard.
That is indeed a relief, Mr. President.
I know you were sitting on the edge of your seat for that actual report.
I was disappointed at the silence, but I'm relieved at the
That's
confirmation.
very good.
Does that mean we can reduce the subsidy?
Good afternoon, Ms. Crane.
Good afternoon. I barely recognize you.
Oh, it's good to see you again, Ms. Crane. How are you?
I'm fine,
Okay.
thank you.
PSEG.
We have met. Thank you, Mr. President. My name is Matt Weissman. I think you know, and I'm representing PSEG Nuclear. I'll be asking you some questions this afternoon. Ms. Crane, you reviewed the planned capital expenditures in PSEG's application, correct?
Yes.
And in your testimony, and I'm looking at paragraphs kind of the middle of page, or I think the most of page 23 in your direct testimony, you drew a distinction between two different types of capital expenditures, correct? And by that, I mean, you distinguished. Go ahead. You can answer.
Well, I was going to ask you if you could point to something specific. Are you talking about the unallocated future projects, the reference to unallocated future projects, and then the blankets?
No, I'm talking about the reference to business as usual expenditures. I think it's about lines 11 through 15 of your testimony.
On page 23?
23, correct.
Got it. Yep, got it. Yes.
Okay. And you testified that the board should consider whether capital costs included in the cost calculation submitted by PSEG should include all business as usual capital expenditures, or only those expenditures necessary to keep the plants in business and in operation for 3 years. Is that correct?
Yes.
And you suggest, and it's not entirely clear in the testimony, Ms. Crane, because you used the phrase "one should ask," but I think the implication of your testimony, or the purpose, is to say that the board should essentially ignore or not consider the business as usual or ordinary course expenses, capital expenditures, if they're not going to be required to keep the plant operating for the next 3 years.
Well, I think it's
That's your
broader than
testimony?
that. Earlier in that section, I talk about I thought you were asking about this, the unallocated future projects and the blanket projects, and the fact that many of the capital expenditures that were included in your filing were basically unidentified at this point. So you had dollars, but you didn't necessarily have specific projects. I mean, in some cases you did, but in others you simply had sort of this almost an other type category. And therefore it's very difficult to know when you're looking at those numbers, whether or not they are needed for the long-term for the long-term operation or for short-term operation. To the extent they are needed, they are not needed, for the long-term operation, but would only be needed over the next 3 years, then the commission may want to consider them. I don't think the commission, though, or the board should be considering projects that are not needed in the next 3 years, and that perhaps would be more geared towards keeping the plant operating throughout its entire current license period.
Thank you, Ms. Crane. But you would agree, wouldn't you, that in the course of operating a plant like Salem or Hope Creek, that in the ordinary course of business, the plant operator might identify necessary capital expenses or repair projects that may or may not need to be done immediately, correct?
Well, I would think that they would identify projects that are not that do not necessarily need to be done. Yes, you can identify those projects, but you may very well not obtain the financing for the projects. You may very well not undertake the projects. And just like in a regulated environment, you may not include them in rate base. And so I think it's important for the commission when it is reviewing capital projects, especially given the fact that you've included 100% of the costs in 1 year, a recovery of the costs in 1 year. It's especially important to make sure that all the projects that are in there are really necessary in order to keep the plant open during the next 3-year eligibility period.
Thank you, Ms. Crane. But it is possible, isn't it, that the operator could discover a variety of capital or maintenance needs in the course of an ordinary year operating a nuclear plant? Isn't that right?
I presume they do. I mean, I think a prudent operator would consider the needs, both operational and capital, of the plant operation, and I'm sure that some of those are not known until you're actually into it. I would think also that a prudent budgeting exercise would take into account the fact that there are always going to be both operational costs as well as capital costs that you haven't been able to identify with specificity prior to the beginning of the period.
And thank you. And you did, and I believe you just said that, you know, there it will be likely that there will be capital needs identified that were not known prior to that need arising. Isn't that right? You just said that.
Yeah, and I said they should already be included in some sort of capital budget. So I think that, you know, it's not unusual to have things break down or whatever. I mean, that's the nature of the business, the nature of any business, in fact.
And if the company identifies a need of that type during the operating year, isn't it the case that by deferring the maintenance at that time, the operating risk of continuing to operate that plant will have to go up?
Well, I'm not sure whether you're talking about operating or whether you're talking about capital. I mean, if you have a need, whether it be an operating need or a capital need, the operator obviously has to make the determination as to whether it's something that can be deferred or not. You know, and that's a whole spectrum. I mean, it's not a yes or a no answer. I mean, I'm sure that there are hundreds, maybe thousands of those types of decisions that are made in a nuclear plant operation. So to the extent there's something that needs to be done, you know, and then it's up to the company to decide when it needs to be done and what the implications are if it's not done. You know, what will happen if you don't undertake that program and the worst happens. I mean, what would the impacts of that type of a failure be?
And Ms. Crane, obviously you've, in your professional experience, have never been in a position where you had to make a decision of that type, whether a capital or maintenance project needed to be done on a nuclear power plant. Is that correct?
No, I've reviewed a lot of costs that were requested in regulated utilities rate bases and made certain determinations because I do a lot of work in states where actually the generation is still regulated. But I've never been a nuclear plant operator, so I've never actually had to make those decisions myself.
Thank you. Ms. Crane, generally, a regulated utility in the rate setting process, and you just mentioned that, rate of return is included in a regulated utility's rates generally, correct?
The opportunity to earn a rate of return, yes, that's correct.
And that's in recognition of the fact that investors in a regulated utility expect a return on capital in addition to a return of capital. Would you agree?
Well, that's really reflects the return on capital. The return of capital is a separate revenue requirement component, and that's depreciation expense. But I would
And
agree
both
with
of
you
those-
that investors do expect both a return of and a return on capital.
And you would agree, Ms. Crane, that energy utilities regulated by the BPU in New Jersey are generally permitted to recover a return on equity of around 9.6%, correct?
I believe that 9.6% was authorized as a result of a couple of settlements that in prior regulated cases. That doesn't mean that they're guaranteed that 9.6%, but I believe that there were some revenue requirement settlements at 9.6% recently.
And that's the allowed return permitted in the rate setting process that you're aware of, correct?
It would be the return that's included in the revenue requirement that's authorized by the board.
And thank you. And would you agree that the specific level of the return allowed to any particular utility reflects the risk associated with an investment in that utility?
That's an interesting question because usually it actually reflects the risk of a comparable group of utilities. I mean, that's kind of the way that rate of return is generally analyzed, with what would be a risk, what would be the return of a group of companies of comparable risk to the utility in question.
Thank you. Thank you. So investors expect the public utility business to break even on its going forward costs, but also to generate a return that reflects, as you just mentioned, the level of risk inherent in that type of business, correct?
Well, that's the expectation.
That's the goal of the rate making process, correct?
Well, it's the goal of the rate making process to allow the utility the opportunity to earn a certain rate of return. Obviously, utilities can earn more and they can earn less. And in some cases, for short periods of time, they don't earn anything. Similarly, they also have the risk of being called back in before the regulatory body should their earnings exceed the authorized rate of return, and should that condition be expected to continue into the future.
Thank you. Ms. Crane, in your opinion, is the merchant nuclear generating business more or less risky than the regulated utility business?
Well, I think it probably is more risky, and it has more opportunity as well. So I think it kind of goes both ways. There is risk and there is opportunity. The other thing I think you have to think about also is that you're not really dealing with only a merchant business or only a utility for that matter. You're dealing with a group of companies. And for example, you could have a merchant plant that was losing money, but the tax advantages could be very valuable to the utility because it could offset all the utility taxable income, for example. So I think there are so many factors that impact how beneficial any particular company is in your portfolio. You know, it's not simply looking at a return component, for example, on a merchant plant versus a regulated utility.
Ms. Crane, you're not aware of any energy holding company that continued to operate a nuclear power plant that was losing money in order to provide tax benefits to its regulated utility, are you?
I don't know what decision-making processes are used by all nuclear operators. I mean, nobody does. We don't even know in this case what decisions PSEG or Exelon might really use to make a determination as to whether to keep these plants open or not. I mean, we're here looking at projected costs and revenues, but there could be a whole host of factors that would go into the decision as to whether or not these plants should remain open or not. And I've certainly have been in many cases where companies have used tax losses to great advantage for other members of their consolidated tax group. So I think there are just a lot of factors involved potentially in that decision making.
So Ms. Crane, are you suggesting that in this case, the case that we're in before the BPU, the ZEC 2 case, that PSEG has not provided information about its decision-making process?
Well, you've provided information about projected revenues and costs, and you've said that if you don't get a certain level of ZEC subsidy, you are going to close your plants. I think there are likely to, and maybe that's it. Maybe that's all you looked at and everybody went home. I don't know. I wasn't in the room. Wasn't in the room where it happened, as they would say in Hamilton. But I would say that I think that any business does take a very comprehensive view of the future. I mean, it may be that down the road, you see tremendous potential for these nuclear plants, and you would never sell them no matter what happened next year or the year after that. Just the opposite is possible too. I mean, perhaps there's some strategic value to PSE&G to retain those plants. I think, generally speaking, many decisions involve factors in addition to revenues and costs. That's all I'm suggesting. And so I think it's very difficult for us sitting here today to say, to draw a line in the sand. I mean, you've said it, your president or chairman has definitely said that they will close the plants if they don't get the $10. Will they really close the plants? I mean, I guess that remains to be seen, but I think there are many reasons why they may not close the plants.
Ms. Crane, you mentioned, and so there are many factors at issue. Ms. Crane, you saw Mr. Craig testify this morning?
I heard him. I did not see him, but I did hear him.
And Mr. Craig is a witness in this case, correct?
He is.
And Rate Counsel has had several months to conduct discovery on PSEG's application and to determine the thought process going on in making that decision as to whether to keep the plants open or closed, correct?
Right. And we have. And what you've said is we need $10. That's what you've said. We need $10 or we're closing them.
And has PSEG refused to answer any of the questions that Rate Counsel or the other parties have asked in this case in discovery or elsewhere?
No, they've said we need $10 or we're closing them.
Okay, thank you. And you don't know why, correct?
Well, I'm not sure whether you're asking whether I don't know why the $10 is the magic number. I mean, the $10 is the number per the legislation. Obviously, PSE&G claims that actually it needs more in order to cover its costs, as it has defined costs. So initially, I think when you, I won't get into any numbers, but there is a differential between the subsidy that is claimed to be needed to cover all your costs and the $10. So, I mean, you have to make some decision. You've obviously made some decision that, $10 is your number. Well, I don't know, is it really your number? Maybe $9 is your number. Maybe $8 is your number. Maybe there'll be some sort of technological development that will change that number. I mean, there are a lot of factors that go into that.
Thank you, Ms. Crane. You're aware, aren't you, that several nuclear plants in the United States have closed in recent years, correct?
I am.
Yeah, you list several of those plants in your written responses.
Yes.
But you don't know why any of those plants closed, do you? What the basis of their decision to close was? You don't know.
I haven't worked on any of those. I'm just looking over the list that I think I did actually work on Vermont Yankee years ago, but I don't think I've worked on any of the others. So I wasn't involved in those cases, so I don't know.
Ms. Crane, can you read to me the first sentence of your response to, and this is in the record, your cross-examination question 1 and response A? Please read the first sentence to me.
Sure. Ms. Crane has not previously reviewed the basis on which a business has made a decision to cease operations and did not do so in this case. That question was generic as to a business. And then your second part B actually went into the nuclear plant operators.
Right. Okay. Thank you. So in fact, you've never had to, and I think you testified earlier, you've never had to make the kind of decision that is being made by PS and by the board in this case, correct? Whether to shut down a nuclear plant or not.
Well, that's not really a decision that's being made by the board. That's a decision that's made by PSC&G. And I've never had to make a decision as to whether or not to shut down a nuclear plant. And that will be made by PSC&G regardless of what the board does. So the board is not going to make that decision, regardless of whether they give you the $10 or not. That decision will be made by PSC&G.
Thank you. So you've never had the opportunity or the responsibility to consider the likelihood or the impact of future NRC regulations on a power plant, on a nuclear power plant. You've never had to do that, correct?
Well, I've never operated a nuclear power plant. However, I am involved, in a lot of regulatory proceedings where the utilities actually still own nuclear operations. So I do have to consider the impact of future potential future regulations on cost to ratepayers, but I haven't had to do it as an operator.
And in your cross-examination answers, Ms. Crane, you referred to a nuclear operator's normal capital and operating budget process, correct? Yes. I think that's in your response to question 7. You referred to what you call a robust capital and operating budgeting process that you believe the company should be pursuing. Is that correct?
Yes.
But you've never actually taken part in an actual normal capital and operating budget process for a nuclear power plant, have you?
Well, not from the perspective of the nuclear power plant. As I said, I've been testifying for, unfortunately, over 30 years on utility matters, and many of those included utility matters involving nuclear facilities and costs related to nuclear facilities. So I have had a fair amount of, I've had to do a fair amount of analysis of costs. I've never actually had to create a budget for a nuclear facility.
Thank you. And another element of this case that's before the board is as a revenue projection from PSEG that takes into account the appropriate amount of risk regarding the output and market prices. Isn't that correct?
Well, I just want to clarify, I didn't actually do revenue. The revenue issues are handled by Rate Counsel's other witness. However, but if you're talking about the cost, the claimed cost of market risk, that is something that I addressed in my testimony, which you define as related to the potential variations in market prices.
Okay. But aside from reviewing or critiquing somebody else's revenue projections, you've never actually done that yourself. Is that correct? For purposes of making a decision about a power plant or some other large facility.
I'm going to object because she just said she didn't do revenue. She did costs. So I'm unclear why we're asking her questions about revenues. I think that's a question for Mr. Chang.
I agree with Mr. Yes, sir. Go on, Matt.
That's fine. Withdrawn.
Okay.
And you've also testified in your responses to cross-examination requests that written requests that you haven't actually, we go to the plants that you're aware of that have closed already. You've never conducted a study to determine the type of accounting methodology or other factors relied on by those plant owners to evaluate whether to cease their operations, have you?
I say here that I have not conducted a study to determine the accounting methodologies used by each plant owner to evaluate whether to cease operations. That's correct.
Thank you. So let me understand. I want to understand your testimony in total, Ms. Crane. You haven't done any capital budgeting projects for any nuclear power plants, correct?
Not as an operator. However, as I indicated, I've testified extensively in cases on revenue requirement issues that addressed costs for utilities, including costs for nuclear power plants.
Okay, so you've testified about somebody else's study, but you have not done one yourself, correct?
Yeah,
Um,
I've said it like 5 times. I've never worked as a nuclear plant operator. So if that's your question, I will say it again. I've never worked or owned a nuclear power plant or worked for a nuclear power plant. So I was not involved in doing that on behalf of the power plant.
And you clearly said that you have not previously reviewed the basis on which the business has made a decision to cease operations, and you didn't do that in this case, correct?
Well, I think you're confusing 2 questions. The question about the business said that was a generic question about a business. Okay, and basically what I said was that I did not undertake a review of that in a generic business way, and I did not do so in this case either. And then your part B of that question was the question that got into the nuclear plants themselves. And that question, I said that I did not conduct a study to determine the accounting methodology.
Thank you, Ms. Crane. And you would agree, wouldn't you, that PSEG has done these things in this case, has evaluated costs and revenues, taking risk into account? They've done that, correct?
They've provided revenue projections and cost projections, and they've claimed that there is a need for a subsidy in order to keep the plants open.
And I think you testified earlier that PSEG has stated that without extension of the current ZEC payment, the plants will close. You're aware of that, correct?
I'm aware that they've said that, and I'm also aware that they've said the plants could close even if they get the $10 subsidy.
Thank you. So in this situation where if the element of this that's within the board's control, whether or not the ZEC program is extended, in this situation where the company has said that they will close the plants if the ZEC current program is not extended, your expert recommendation to the board is simply that you don't agree with PSEG's analysis and the board should take a chance? Is that your recommendation?
My recommendation's in my testimony. My recommendation is that there are serious flaws with the company's numbers that they have provided in order to justify their need for a subsidy. My testimony is that there are many other factors that generally are considered by companies when they make decisions rather than simply looking at a revenue and cost projections over a relatively short period of time. My testimony is that the board could award ZECs and the plants could still close. I think these are all important factors. The board certainly, has, if they choose to accept all of PSEG's numbers, they can do so. But I think that there are serious deficiencies in the analysis that has been provided. I think there are serious questions about the thought process, the decision-making process. And I think there's also, as really Mr. Chang discusses, I think more in his testimony, there are also changes in rules at FERC and potential PJM changes that might impact the financial picture going forward. And so I think there are a lot of different factors that the board should take into account, and I don't think they should simply rubber stamp the company's filing.
Thank you. So Ms. Crane, your recommendation, and I'm just a couple more questions. Your recommendation is that the board should simply disbelieve the statements, the submissions of PSEG, take the chance that the plants won't close, and not award the full ZEC, even though closure of the plants will result in increased emissions and negative health consequences in New Jersey.
Your Honor,
that's your testimony.
I'm going to object to that on multiple. First of all, it's a total mischaracterization of her testimony. She didn't say whether it was based on whether PSEG's threat is real or not real. And certainly there was a little bit of testimony in that question as well. So overall, I'm just objecting to that, both the substance and the nature of that question.
Ms. Crane, I'll rephrase it, Mr. President.
Okay.
Ms. Crane, is it your testimony that the board should not grant the extension of the ZEC program, even though closure of the plants will result in increased emissions and negative health consequences?
Well, I didn't testify about, I didn't testify about increased emissions or health consequences, but I think there's a lot of factors that the board has to consider. I mean, I think the board, frankly, should first consider what gave rise to the ZEC legislation in the first place and how we got here, and perhaps, you know, what entities that pushed the ZEC legislation. I think they should consider the fact that New Jersey has relatively high utility rates already. I think they should consider the fact that we're in the middle of or hopefully maybe towards the end of a pandemic. Do we want to put another, you know, $800 million burden on New Jersey ratepayers? I think they should examine the costs that have been provided by PSE&G or PSEG, and they should critically review each element of cost that was provided and decide whether or not they think that that's an appropriate cost to include in a ratepayer subsidy. Although it's not my topic, they should also examine revenue projections that other parties have testified to. So I think there's a whole host of things that they should consider. My recommendation is that they find that PSEG has not justified the need for a $10 subsidy at this time, or really, I think, for any subsidy, but there are, I suppose, other recommendations of other parties that would that discuss lower subsidies, lower than the $10 the board may want to consider as well. So I think there's a whole host of things, though, that should be considered.
Thank you, Ms. Crane. I have no further questions, Mr. President.
Weissman, thank you. Does the market monitor have any questions for Ms. Crane?
No, Your Honor.
Does P3 have any questions for Ms. Crane?
No questions.
New Jersey large energy users, any questions for Ms. Crane?
No questions.
Board staff, any questions for Ms. Crane?
No questions.
Thank you. Ms. Crane, I do have some questions.
Yes,
First
Mr.
of all,
President.
thank you for being here and so on. I know you appreciate the position that the board is in currently. Our responsibility is to provide reliable service to the 9 million people who live in the state of New Jersey. When a company comes to you and says to you, if you don't agree to our conditions, we're going to close down the plants. You indicated before that there were reasons for not closing the plants. Can you elaborate on that for us?
Sure. There could be some strategic reasons why the companies would want to or be willing to retain ownership of the plants, even though let's even assume that during the second eligibility period, the financials might not be that healthy for the plants. This is such a the whole electric industry is undergoing such an amazing and rapid change. You talked about it this morning a little bit, the technology. So we don't really know, I don't think, what this landscape is really going to look like in the next, let's call it 10 years. We know that we have more and more states that are passing renewable portfolio requirements to go carbon free. We know that there are things happening on the international stage that have the potential to impact the prices of oil. We know there's potential legislation domestically that has the potential to change the oil and gas industry in the United States and the price points involved in that industry. I mean, there's a lot going on. there are things like tax breaks. People actually do sometimes feel that an asset is valuable enough to retain in order to be able to use the tax advantages of that tax asset. So there are a whole host of reasons why people make the decisions that they do. In my experience, it's not always just about dollars and cents, and sometimes it's not even about dollars and cents. Now, you are in a really tough position. I absolutely acknowledge that, because in a way, I mean, PSE&G is threatening you by saying, give us our $10 or we're walking. Okay, and you have to think about, first of all, you have to think about what the implications are if they do that. If they leave, all right, and the plants are closed, you're going to lose a large source of power that's currently serving New Jersey. On the other hand, you have a marketplace in place that I think has enough safeguards to be able to address that situation were it to happen. You'd have some time to address that situation too. It's not like they can close these plants overnight. So I have a lot of faith in PJM. I have a lot of faith in the people there, and I don't know, maybe I'm an optimist, but I think that even if the plant's closed, there's a good chance that your reliability would not suffer. But I don't know, I don't know what PS is going to do. I'm not even sure that they know for sure what they're going to do. And as I've said, you can give them the $10 and they could still close the plants. So I think for me, and I know there's a whole history of this legislation that you have had to deal with as well. For me, I think I would try and take that threat out of the equation. And I would say, let me make the best decision for my ratepayers that I'm representing here. What, do the costs make sense to me? Does their cost presentation make sense to me or not? What happens in a worst case scenario if the plants are shut down? I mean, is there a backup plan that can pick up the slack here? And so I think there's a lot of factors like that for you to consider. But I think you should try and remove the emotion from your decision-making process, because I think there has to be emotion. Anytime somebody says to you, do this, if you don't do this, I'm going to do this. Emotion gets in the way of that process. And I think if you can remove that emotional element and try and objectively look at the data, that will result in the correct answer.
Ms. Crane, I'm going to ask you for a moment to put yourself in our position as a board. First of all, we had no direct input into legislation that you're referring to. We live by the direction of the legislature and whatever laws they pass, we are obligated to follow because we are a nation of laws, even though some may object to that, as we've seen in previous situations. But it is incumbent upon us to ensure the fact that when I walk into a room and I throw the switch on, that I have lights. Or when I turn the heat up, I have heat. Or I have air conditioning, or whatever. Mm-hmm. Again, if you're in our position, I don't know what PSEG is going to do, just as you don't know. Mm-hmm. Are we willing, again, now you're in our position, are we willing to roll the dice? And from what you've said, I suspect you're willing to roll the dice. Is that correct?
I would be willing to roll the dice, but it's not my decision, but I'd be willing to roll the dice.
Okay. I hear you loud and clear. Thank you very much. Do any of my colleagues have any questions for Ms. Crane?
Mr. President, Ms. Crane, thank you so much for your presence. You made a couple of profound statements in that, you should take, as a regulator, our job is to protect the interest of balance the interest of the ratepayers and the utilities, and taking emotions out of, of the judgment, because there is an old famous movie says emotions affect judgment, and so it's a very so it's a gangster movie, but that's the point. And so also given that
Are you talking about gangsters, Mr.?
yeah, I was in Godfather.
Oh, I see. Okay.
They said emotions affect your judgment, so keep them aside. That's what
I understand. Okay.
So I mean, given, if you look at in New Jersey, we have a energy master plan, we have the Clean Energy Act of 2018, we have number of initiatives, governor's initiatives trying to, subsidize this, subsidize that. And there are so many things, once you start overlaying one on top of the other, and suddenly we were hit with COVID-19 pandemic last year, and people have experienced in the north of $700 million in arrears. And so, I mean, as a regulator, I like to keep all those things in mind. So what, I know we don't know what PS is going to do. We don't know what we are going to do as the board. A lot of these questions are up in the air. But I think we are talking about the numbers, what the PS has presented, and the legislation, the law calls for, if PS numbers show that they need the subsidy, then only board has to act. I mean, that's what the law, my understanding of the law. So it is a tough situation. But based on your analysis, you think that there are a lot of numbers that don't add up, so maybe they could be fixed. What do you think about that?
Well, yeah, I mean, I think if you, I'm just looking for my sort of summary in my testimony on page 34, I kind of summarize the issues that I addressed earlier in the testimony, and this is confidential. So sorry, actually I can't, I just realized this is confidential, so I can't actually tell you what the numbers are, but I did express concern about several aspects of the company's filing: the operational and market risk, capital expenditures, spent fuel costs, support services and overheads. And if you look at those costs as a percentage of the total shortfalls that are being projected, I think that's helpful information to look at those numbers in light of what PS is claiming they need in order to stay in business. In addition to that, the shortfalls, the $10, and this is public, the $10, according to PSE&G, the $10 will not cover the entire shortfall. Okay, so they've obviously made a decision somewhere on the amount that they at least claim they will take. They've said they will take $10. Well, since there's a variance between that $10 number and their total claim shortfall, then the question is, why $10? Well, why $10? We know why, because that's what is in the legislation. But what's so special about that $10 number? I mean, maybe it's $9, maybe it's $8, maybe it's $5, maybe it's $0. There are other people in this case that have put forth subsidy recommendations that are different than a $10 number. Maybe that's where you should end up. But so but I definitely think you need to look at each of these factors as a percentage of what they're asking for in terms of the subsidy, and take that into consideration when you make your decision. I don't know if I answered that question or not.
Thank you. No more questions.
Okay, thank you.
Thank you. Bob?
Yeah, I was going to ask Ms. Crane to discuss some of the flaws that she saw in the financial presentation by public service, but I think she just did that.
Okay.
And I know she needs to do that, at least in public session, in a very general way. So I don't think I need to probe any further. Just one other question. Are there, aside from the financial aspects of this, or of the presentation, are there other issues that the board should take into consideration? The potential impact of some changes from Washington, other exogenous forces that we ought to be considering as we make this decision?
Yeah, definitely. I talk about some of those in my testimony, and I think Mr. Chang talks about some of them as well. Some of the changes with regard to the energy markets and how resources will be bid in the future into those markets. He's much more of an expert on that whole revenue side than I am, but there are certainly those changes. Given the new administration, that's a big unknown. What's going to happen there? But I think it's safe to say that that the next 4 years are probably going to look a lot different than the previous 4 years in terms of energy policy, and which, it's interesting because I do a lot of work in New Mexico, and of course, oil and gas is a big piece of their business, and the next 4 years might look, there's going to be winners and losers, is what I'm saying, over the next 4 years. It's not the legislation, any legislation that comes out is likely to help certain areas of the country and certain industries and hurt others. We don't really know what the impacts will be for New Jersey at this point in time, or the nuclear industry. But I think one thing we do know for sure is that there will be something that looks much different from what we had in the last 4 years. And we're going to have to all deal with that and figure out the best path forward. Also, more and more states are implementing, as I mentioned, these renewable portfolio requirements to get to a carbon-free future, by a certain period of time now. So, that's another in consideration.
Thank you.
Anything else, Bob?
No, thanks.
Okay. Any other questions for Ms. Crane? Yes.
I do. Ms. Crane, you talked about New Jersey having the highest electric rates, or high electric rates. What is the largest portion of contributing to those rates?
Well, I'm not actually sure. I think it's probably CapEx, because that's happening all over the country. You're actually probably somewhere in the middle with regard to return. So you certainly don't have the highest return on equity awards. You don't have the lowest either. So you're sort of somewhere in the middle there. You certainly do have things like high cost labor forces in New Jersey. It is expensive to do business in New Jersey, not only with the labor, but also with vendors, with construction, contract operations. It is a high cost area in general compared to a lot of other places. So that all factors in. And frankly, I think that some states that did not deregulate, did not sell off their generation, have found themselves doing much better than many of the states that did. And so I think that probably those deregulation efforts might, at the end of the day, have resulted in higher rather than lower overall bills to ratepayers. I lived in Connecticut for 30 years, so I can really appreciate, what it's like to live in a high cost utility state. And so I think there's a lot of factors.
Well, actually, the highest cost contributing to our rates, our energy continues to go down in price, is the transmission costs and the cost allocation of transmission, which is out of our control, it's federally controlled. So if these plants were to close, in order to meet our aggressive portfolio standards, we would have to import from elsewhere. I don't know how much we don't have a good fuel diversity index figure to work with right now, where it would come from, but it would mean have to bring more transmission in from somewhere, since we are the end of the line. And then you have to weigh your costs because of that public policy, not emotion. And I take umbrage with that term. The public policy, balancing it with the necessity of reliability, and you're going to have exorbitant costs added on with transmission as that gets compounded into it. I'd like to be the one exporting to another state rather than importing.
And that would be great if the ratepayers could benefit from that. You know, I mean, one of the concerns that we have is that this is a one-way street. You're being asked to award these subsidies, but the ratepayers are not. There's no process in place for ratepayers to benefit should the revenues, you know, exceed these revenue projections. So you're absolutely right. If you could export and you could make a lot on these plants and you could share some of that with the ratepayers, you know, that may change the analysis, but that's not the scenario that's currently under review here. This is a one-way street. They get the subsidy and that they claim they need, and then they get to keep any profits, any excess.
But you just said what a high-cost state this is, and then a litany of things. So it's a business. It's not a break-even Catholic charities that we are looking at. And we're also balancing that other public policy, as President Fiordaliso has said, so legislation we'd be given. And I do want to just make one statement, is that if we're going to wait for Washington, we know the snail's pace that they operate at. I can't wait the 3 years in between for something to happen. So that's where we are now. We have to deal with the here and now and the figures that we have been presented to us now.
Yeah, and I don't think we're disagreeing with that. We're just saying, take a critical look at those figures and base your decision on all the evidence that has been put before you. That's really the recommendation.
Always do. Thank you.
Any other questions for Ms. Crane? I have to agree with Commissioner Holden here. I don't think that this board operates on emotion. I think our primary bottom line concern is to the ratepayer of the state of New Jersey and the viability of our utilities. Unlike our friends at Rate Council, we have to balance every decision we make between the well-being of our ratepayers and the well-being of our utilities. And I have the greatest respect for Stephanie Brand and Brian Littman and the entire Rate Council crew, because they operate just as we do on their mission. And that's commendable. So to say we operate on emotion, I think is a little unfair insofar as what we look at. We try to be as fair as possible between the ratepayer and the utility. We want our utilities to be vibrant. We want our utilities to be solid. And we are careful in what we say publicly, because our business is not to move markets. Our business is to secure the viability of our utilities and to protect our ratepayers. So we're coming at it from a dual position, and so on. And you know, if I were deciding things as an example for my particular home and what goes on in my paradise here in where I live in Livingston, New Jersey, and we don't have oceanfront property like we do in Trenton. So you see here. Thank you, Ms. Crane, for cracking a smile for me. Nobody else is. So it is. It's important, you know, if I were making that decision for me and the well-being of my family, I might roll the dice and say, you know what, there's a good shot that I might be successful. Anybody who's invested in the stock market is doing that every day, right? They're kind of rolling the dice and hoping it works out and so on. But we're dealing with 9 million people who are depending on us to ensure the fact that when they flip the light switch, the lights go on. And when they turn up that heat, the heat comes on. And when they turn down the heat, that air conditioner comes on. That's our responsibility. And you're absolutely right, and Ms. Crane, and I appreciate your expertise. I really do. I've learned from you today, and I appreciate that. Thank you. But that appreciation, and these are tough decisions we have to make. And the board collectively makes those tough decisions every single day. What's in the best interest of the 9 million people who live in this state? And my concern always is that we need bridges to get us to our ultimate goal of renewable energy, 100% renewable energy by 2050. That's what's driving me personally, because that's the legacy I want to leave to my grandchildren and to their children. So how do we get there? What bridges do we need? How can we guarantee the reliability of our system? What do we need to get us there? And as a public servant for most of my life, my concern has always been that I make somebody's life a little bit better today. And if I didn't, then I didn't do my job. And that's how I proceed constantly in my role. The board, as you acutely demonstrate, has a tough decision to make here. There is no question about it. But with my colleagues, we're going to have to make that decision. And I just want you to know that your expertise and your input is certainly helping me along that route. So I want to thank you so much for being here and willing to dispense your expertise to us.
Thank you. Thank you.
And there are no other questions. Brian, do you have other witnesses to come before us?
Stephanie, I think Stephanie's trying to talk, but you're on mute.
Oh, I'm sorry. I'm sorry. I just need to make a statement for the record. You asked Ms. Crane a question about what she would do in that circumstance. I don't think Ms. Crane was suggesting that that you were acting on a motion. And I really think that this is supposed to be an evidentiary hearing, and she answered your question. And I just need to state for the record our fervent objection to speeches about grandchildren and characterizing Rate Counsel or Ms. Crane or anything about speeches about grandchildren and things like that. This is an evidentiary hearing, and it is not about, we're here to build a record, and I very much object to any characterization of our witnesses as here to do anything other than answer the questions that are being posed by counsel and by the commissioners, and being portrayed as somehow her saying anything inappropriate here. And this is supposed to be an evidentiary hearing. I realize there are no judges here, and we really can't object to the questions being asked by the commissioners. But I really believe that this is not an appropriate course that this hearing is now taking. I would ask that we stick to the evidence and the appropriate questioning of the witnesses.
And Ms. Brand, I'm sorry you interpret it that way. That was not my intention. And I apologize if indeed that's how you interpreted it. But I'm just trying to look at the broader picture here, and that we have an obligation to look to future generations and not just to look at today.
Understood. Your role today, though, is as the trier of fact at an evidentiary hearing.
I appreciate that, but I meant no harm. I meant no implication. I meant no statement that I intended to offend anyone. That was not my purpose. My purpose is that we have a tough decision to make here, and one that we're going to have to make. And I was trying to compliment, and if you took it incorrectly, I apologize. I was trying to compliment the role of the Rate Counsel and what they had input into what we're doing, and that we respect where the Rate Counsel is constantly coming from. So if you interpreted it that differently, I apologize. That was not my intention at all.
Thank you.
I have a question.
Yes.
Yeah. Has, in the items that you reviewed, there's been some question about reliability being at issue. I don't recall anyone testifying that, or in the documents reviewed in terms of that there was a reliability issue. It's my understanding from what you're saying that it's a cost issue more than, am I right in this particular assumption?
I think it is a cost issue before us now. I think the reliability question came in with the implication that what happens if the units are shut down? If the units are shut down, will the lights go off? And I think that's what I was trying to address when I talked about the fact that there's PJM and other safeguards in place to make sure that the lights will not go off if the unit shut down. But right now before us, it's a cost issue in terms of the way that that this analysis has been framed so far.
Right. And with respect to the emotional argument or not, I did not take your statement in quite the same way, and hence was the reason for my question earlier about, is there any impediment that of from a business standpoint, where the PS on the one hand has said, we are definitely going to close these down if we don't get it. But from a business standpoint where they couldn't, on the flip side, also say, we guarantee that we're going to remain operating, should we, receive the $10, I'm trying to understand why, if there's a business reason or something in that you've reviewed the numbers that would allow them to say one but not the other, from a, what you've reviewed.
Right. And yeah, and let me just say, it was not my intent to imply that any of you, make decisions with regard to utility aspects, based on emotion. There are just a lot of factors in this case. So if I've offended anyone, I apologize in that regard.
No,
But
I agree with
there
you
are,
that,
yeah,
that's certainly a factor for the board to consider.
right.
And that's why, personally, I'm answering the question.
I think, I mean, anytime, as I said before, anytime somebody says to me, do this, or I'm going to do that, I think we all kind of maybe get a little bit like defensive. And, and I'm trying to get beyond that. And I'm trying to say, all right, I mean, as you say, there's no guarantee these plants are going to stay open. We can do what they want and they can close them anyway. There's no provision in place for us or the ratepayers to benefit from any extra earnings or excessive earnings, or if costs are low and revenues are high, that all goes into PSE&G's pocket. And yet ratepayers are being asked to be put out there with subsidizing these units, not even to get into the fact that these units are deregulated and that the companies were paid for stranded costs, years ago. And I'm old enough to have been there when that happened. So, so we sort of paid them once for these, and now they're coming back and they're saying, pay me more. And it's not an easy decision. I mean, if it was an easy decision, we could all go home. So I really do sympathize with you. And there are a lot of different factors, but I think the fact that.
So this is in terms of the way that the board traditionally would make these decisions and come to these determinations. What you're saying is that this is, sort of, out of the wheelhouse generally of how we would approach, dealing and evaluating this type of proposal.
Absolutely.
Am I characterizing that?
Yeah, because I'm a revenue requirements witness usually. So I sit there and I look at numbers and I say, okay, the utilities need X amount of a rate increase, and it's a pretty subjective, I mean, it's a pretty objective analysis. Here there are a whole host of subjective issues that you have to consider that make this a much more complex decision than maybe some of the others that come before you.
And just to make it clear that I understand your testimony, is that you would direct our attention to those cost, revenue projections, and the like in terms of evaluating the efficacy of the $10 more or less in our decision making.
That's correct.
Anything else, Commissioner? Commissioner Solomon, anything else? Ms. Crane, nobody likes to operate, myself included, with a gun to their head. And so I appreciate, again, your testimony. I think I've learned a great deal from you today, and I appreciate that. So thank you very much.
Okay, thank you. Good luck.
I think we need more than luck, but thank you. Mr. Lippman, any additional witnesses?
Yes, Rate Counsel calls Max Chang.
Where's Max?
Maximilian Chang. I hear him, but I don't see him.
I don't see him either.
There he is.
Oh, there he is.
See me?
I see Andrea.
Okay, hello, Max. All right, would the court reporter please swear in Mr. Chang?
You could raise your right hand. Do you solemnly swear or affirm the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank
you.
Lippman?
Oh, yes, Mr. Chang, can you state your full name?
Sure. I am Maximilian Chang, Maximilian, and I'm a principal associate with Synapse Energy Economics.
And who are you here on behalf of today?
Oh, sorry, for Rate
That's
Counsel.
Okay. And did you provide testimony in this case?
I did.
And do you have any corrections to the testimony?
I do have corrections that were noted in my response to the request provided by PSEG. Those corrections were noted in my responses.
And do you have any other questions?
No, I do not.
And if I were to ask you those questions today, you would answer them the same?
I do. I would.
And you mentioned you answered cross-examination questions as well?
I did.
And do you have any corrections to those, the answers to those questions?
I do not.
And if you were to be asked those today, you'd answer them the same, correct?
I would.
So I think we are on RCR 3 for Mr. Chang's testimony and RCR 4, RC4, there's no R, sorry, RC4 for his responses to discovery for identification.
Okay. Without a objection, so numbered. Thank you.
Thank you, Mr. President. And with that, I present Mr. Chang for cross-examination.
Thank you. PSE&G or PSEG rather. Questions for Mr. Chang?
Thank you, Mr. President. Good afternoon, Mr. Chang.
Good afternoon.
My name is Grace Park, and I represent PSEG. I'll be conducting your cross-examination. I'd like to first ask you about your review of PSEG's capacity revenue projections. Do you recall your testimony on those projections?
I do.
And without getting into any confidential information, because we're in the public session, you said that PSEG's projections were too low. Is that right?
I did.
And you actually recommended or suggested that rather than PSEG's estimated capacity price forecast, that the proxy capacity price developed through the BGS proceedings be used. Is that right? Do you recall that?
I did. I made that recommendation, and there are other parties in this proceeding that have different recommendations for capacity prices.
But your recommendation was to use those capacity proxy prices, isn't that right?
That's correct.
And you're aware that those BGS capacity prices are subject to a true-up once the actual capacity prices are known.
That is correct, and I believe I responded that to one of your discovery requests to me.
And you responded yes, isn't that right?
I responded yes, but there was a distinction that the true up was for the BGS proceeding, and that's for an obligation for suppliers in the BGS proceeding, whereas here PSEG is asking for a subsidy from ratepayers.
So clearly there's no true up for the capacity prices under the ZEC process here, isn't that right?
There is no true up. Yes, that's correct.
And you indicated that the BGS capacity price proxy implicitly incorporates the inputs referenced by the company meaning PSEG, and other inputs to the PJM market that are not mentioned by the company. You remember that testimony?
That's correct.
But are you aware that the BGS price proxy is based on the last available historical auction result for 21 to 22?
That's correct. They are the historical prices. Market dynamics, the capacity market rules have changed. Market dynamics have changed, some up, some down. So it may be a wash.
It may be a wash. Is that what you just said?
Yes. I don't know what the next BRA will clear at, but it may be at that price. It may be a different price. It may be higher. It may be lower.
But you agree that the parameters have changed. Isn't that right?
I believe that parameters have changed. That's correct.
Okay. And you agree that PJM has changed, for instance, the reference unit and the net cone for calculating demand curves in the reliability price model since the last auction. Isn't that right?
I agree to that, yes.
Okay. And that was done as part of a quadrennial review process, right?
Subject to check, yes.
and approved by FERC, right?
Yes, so subject to check.
And you know that as a result, that the impact on the prices, if all things are equal, would be lower, right?
I haven't done a detailed analysis of where it will clear, but subject to check, I'll rely on that.
So they are lower, and you just said that you didn't do a detailed analysis. So you didn't provide any analysis related to these parameter changes, right?
I did not do a forecast of capacity prices. That's correct.
Okay. And you just relied on these historical prices that were developed in the BGS price proxy.
I did, but as I noted, there are other capacity price projections in this proceeding. And as I noted in my responses to discovery, that in the resource adequacy proceeding before the BPU, PSEG's consultant indicated that capacity costs for the nuclear units would be at a different price than what the price that PSEG is using in this proceeding.
Mr. Chang, I'm directing you to your analysis with respect to your price forecast. Since each of these changes occurred after the last auction, the historical prices that resulted from the last BRA don't reflect any of those changes. Isn't that right?
I was using, so yes, I mean, the historical prices are, as I stated in my testimony, a proxy. So they're a proxy for future capacity prices.
A proxy that's not based on any of the changes in the capacity markets.
If you're trying to get me to say that, well, I'll just answer your question. That's correct.
Okay. I'd like to address your testimony on the value that you provided on the avoided cost of emissions based on the social cost of carbon. Do you recall that testimony?
I do.
So just as a general concept, the air we breathe doesn't respect state borders, does it?
No, it does not.
So air in Pennsylvania can move to New Jersey. New York air can come to New Jersey, isn't that right?
I did. That is correct. And I do want to note that the way that it's framed in the legislation is just that the costs have to be significantly below the social cost of carbon. But the legislation doesn't define where it is defined. So in other words, does the BPU draw the box within the borders of New Jersey? Does it draw the box between Pennsylvania and New Jersey? Does it draw the box between PJM? Does it draw the box between the Eastern Interconnect? And unfortunately, the legislation is not clear on that. So I chose to draw the box around New Jersey.
So Mr. Chang, why don't we go to the legislation then, since you brought that up. I'm going to share something that was provided last Thursday to all the parties. It's the statute and the legislative findings portion of that statute. Can you see that?
Yes, we can.
Yep.
Thank you. And I'll mark this PS4 for the record.
Without objection, so ruled.
So Mr. Chang, you mentioned the legislation just now, and you said the legislation does not mention whether or not you could box New Jersey or outside of New Jersey. So I direct your attention to this section, which is B1, which reads, and maybe perhaps you can read it for me. Mr. Chang, can you read it?
Sure. The abrupt retirement of existing licensed and operating nuclear power plants within and outside the state that provide electricity to customers in New Jersey, and any concomitant increase in the proportion of New Jersey's electricity demand met by natural gas and coal will result in a substantial increase in emissions of several serious pollutants, and associated adverse public health and environmental impacts.
Okay. And you recognize that this statute actually mentions nuclear power plants within and outside the state. Is that right?
Right, but I believe the background is that if New Jersey had limited the legislation to plants within New Jersey, then you could get into a sort of an interstate commerce predicament.
But Mr. Chang, the language of the legislation talks about both plants within and outside the state. Isn't that right?
That's what it says.
And it also talks about any concomitant increase in the proportion of New Jersey electricity demand met by natural gas and coal. Does it specify where that natural gas and coal would be located if there was an abrupt retirement of nuclear plants within or outside the state?
It does not.
So as a result, it could be that emissions could increase outside the state. Isn't that right?
It could.
Okay. And actually in the language, it says will result in a substantial increase in emissions of several serious pollutants. And does it qualify those emissions to inside the state?
It doesn't qualify that the emissions would be in the state or outside the state.
Right. And rather, it actually talks about plants within and outside the state. Isn't that right?
Those would be the plants. Yes, it does. That's what it says.
And then I'd like to turn your attention to another section of the statute. Right above, section 12. Do you see that, A12?
I do.
And this section says, given the overwhelming scientific consensus that fossil fuel use is causing potentially irreversible global climate change and the attendant environmental catastrophes, it's a moral imperative that the state invest in energy infrastructure within and outside the state that does not produce greenhouse gases. Do you agree that's what it says?
That's what it says.
And if those resources replace that energy infrastructure within and outside the state that does not produce greenhouse gases, do you agree that the energy infrastructure would potentially emit greenhouse gases outside the state?
I'm sorry, could you rephrase that question again? Could you repeat the question?
Do you agree that if the resources replaced the energy infrastructure resources within and outside the state that does not produce greenhouse gases, if those are replaced, that the replacement resources would potentially emit greenhouse gases outside the state?
So I may be interpreting your question incorrectly, but if you're asking if the replacement, can the replacement resources be within or outside the state? Is that the question?
Yes, that's the question.
Yes, it could be. I mean, if New Jersey wanted to, they could invest in sort of non-emitting resources within or outside the state. That's correct.
No, sorry, that was not my question. My question was, this section talks about the fact that there's global climate change. Isn't that right?
Yes.
And that it's a moral imperative that the state invest in energy infrastructure, both within and outside the state, right?
Yes, I just answered that question, right. Yes.
And then the potential that they're talking about here, the legislator is talking about here, is that if the state does not invest in this infrastructure, that it will result in increased emissions, both potentially outside the state as well as inside the state. Is that correct?
I mean, so to the extent that the state is investing in infrastructure within or outside the state that does not produce greenhouse gases, That's what the language says.
Mhm.
Are you asking me, I'm still not sure what you're asking me.
So what I'm asking you, Mr. Chang, is if there are replacement resources that would replace these carbon-free resources, both inside and outside the state, would the emissions result in potential emissions outside the state?
That is a great question that I think is, it depends on how, it depends how states sort of monitor or how states quantify their emissions inventory. I mean, this gets into a broader question of if I have a clean resource in one state, but I'm exporting it, the attributes to another state, can I claim those attributes, or does the other state claim the attributes? And honestly, that is a very hard question to answer, and I think states are grappling with this constantly. So,
Mr. Chang, my question was very simple. Will there be increased emissions as a result of the retirement of these carbon-free resources that the statute's referring to?
Based on the study period of 3 years and the report that your consultant did, yes, there will be an increase in emissions if those plants are retired.
And those emissions could be outside the state?
Your consultant reported increased emissions both within New Jersey and outside of New Jersey.
Okay, thank you, Mr. Chang. And I'd like to direct your attention to another place in the legislation. Section 8, for the record, I think it's B8, 1B8. And it states that the zero emission certificate program set forth in this act is structured such that its costs are guaranteed to be significantly less than the social cost of carbon emissions. Isn't that right? Is that what the statute says?
Yes.
And is this sentence in the past tense, is structured?
No, it's like I forgot my middle school English. I think it's future perfect.
But it's
perfect subjunctive.
So rather than get into complicated grammar, it's talking about what's actually happened, right? This act is structured such that the costs are guaranteed. So it's happened, isn't that right?
Well, yes, I mean, that's what the language states.
That's what the language states. And the program that this is referring to is the program that enables the statute to provide a $10 ZEC. Isn't that right?
This was, yes, the language here is for the legislation that ultimately determined the first eligibility period. So that was the first $10, and now it's being applied to this future second eligibility period.
Right. So the language here states that the legislature has already found that the cost of the ZEC was significantly less than the avoided emissions cost based on the social cost of carbon, even with a $10 ZEC, Mr. Chang. Isn't that right?
Well, that's what they're saying. And I'm just applying this for the second period. In my testimony, I was using the social cost of carbon as an upper bound, just to be consistent with the language.
So, Mr. Chang, I'm going to direct you to kind of the language on the social cost of carbon in the legislation. The social cost of carbon, as calculated by the U.S. Energy Agency Working Group, this cost of carbon is the same social cost of carbon that you're referring to. Isn't that right?
That's correct.
And you're deriving a number at half the value of the ZEC. Isn't that right?
Based on the inputs, yes, that I've stated, that's correct.
Are you aware that New York and Illinois have derived values significantly higher than your value?
Yes, I'm aware of those values.
You're aware that those values are approximately $16 and $21.
Yes.
And are you aware that an expert from ERM, Toby Hanna, provided a value in this proceeding of $18 based on the social cost of carbon?
Subject to check, but yes.
I have no further questions.
Thank you. Does Market Monitor have any questions for Mr. Chang?
No, Your Honor.
Does P3 have any questions for Mr. Chang?
No, we don't.
New Jersey large energy users, any questions for Mr. Chang?
No questions.
Board staff, any questions for Mr. Chang?
No questions.
Okay, thank you. Mr. Chang, let's assume that the nuclear plants close. What should New Jersey do to fill that gap, in your opinion?
That's a great question, President. Are you asking the question in terms of sort of how the state meets its clean energy goals, or are you asking about how the state sort of keeps the lights on?
The state keeps its lights on.
So to that question, to address that question, I think Dr. Bowring mentioned that if the plants were to retire this morning, PJM would conduct a reliability analysis, and based on the results of the reliability analysis, if there was a reliability issue, then there might be a reliability must-run contract for those plants. If there is not a reliability issue and the plants are allowed to retire, then the state would be meeting its needs from either imports from the rest of PJM or from additional resources within New Jersey that would have to operate more.
Mm-hmm. And in your expert opinion, Mr. Chang, what would be the best avenue for New Jersey to follow?
Well, it would be, as in my testimony and Ms. Crane's testimony and some of the other parties, the board has to make the hard decision of looking at the potential revenues, looking at the potential costs, determining which revenues are sort of appropriate, which costs are appropriate. And if it turns out that there is a need for a subsidy not at the $10, then the state may want to grant that. I think the bigger issue is, and we sort of touched upon this all morning through the different witnesses, is that unfortunately the ZEC legislation puts you in this bind where you have to sort of look at this every 3 years. In a way, it's almost like an IRP proceeding, an integrated resource planning proceeding, but unfortunately the BPU is completely sort of bound. You're only looking at either keeping the resource or retiring the resources. And you're only looking at a 3-year period. You're not looking at 5 years, 10 years, 20 years, and you're not looking at alternative resources that could sort of meet New Jersey's either energy needs or sort of energy policy needs. So that's sort of a long-winded way of saying, if it turns out that the ZECs are needed at a lower rate than what PS is proposing, then New Jersey should grant it. But the bigger issue is New Jersey may want to look at resource planning differently, but that would require a change in the legislation.
Yes, it would. If you were making the decision, Ms. Crane indicated when I asked her, would she roll the dice? She said she would. Would you roll the dice?
I would qualify. So I heard your question, and the only thing I would add to rolling the dice is if you come up with a subsidy level that is less than the $10 that $10 per megawatt hour that PSEG is requiring, if you will, then yes.
You would.
I would.
Realizing that our responsibility is reliability.
Yes, I would say that if it turns out that if you come out with a subsidy that is less than the $10, then I think that's what you offer PSEG. And then at that point, PSEG has to either follow it on its threat to retire the plants or say, look, we think that the opportunities in the next 3 to 4 years or longer, depending on whatever their planning horizon is, then we don't know what the decision process for PSEG is regarding the future of the plants beyond the 3 years. And they may decide that it's economic. Clearly, they've offered to sell the the PSEG power, sort of, but they're retaining the nuclear fleet. They're retaining the 3 nuclear units.
All right, let's look at it then from our ultimate goal of 100% clean energy by 2050. Would you look at it any differently that way?
I would say that you would, again, it's sort of a resource planning question. Is the money that would be required to keep the plants open, is that the least cost plan for the state to meet its clean energy goals, recognizing that there are other resources and other technologies that may come into play? And without knowing those scenarios, without sort of modeling those scenarios in detail, the state, you're sort of handicapped in that decision-making process. I mean, the governor has stated a goal for 7,500 megawatts of offshore wind by 2035. Recognizing that some of that won't come in until at the earliest 2025. I mean, you're sort of left in a choice where you have to make these resource plans without full knowledge of their costs and benefits.
All right, let me present it to you this way, Mr. Chang, and I appreciate your expertise here. At the risk of once again offending rate counsel, if I had to choose as a commissioner on the Board of Public Utilities between achieving our goal of 2050 and looking at it from a financial perspective, if you were in my position, what would be your top priority, knowing that climate change is real? And with the permission of Rate Counsel, I'll bring my grandchildren into it again, that it is for future generations extremely important to mitigate the effects of climate change. What direction would you go?
So I I will preface my answer recognizing that I am fortunately not in your position. So
That's correct.
I would say there are multiple objective functions that that you're facing. One is obviously the 2050 goals. Another is protecting ratepayers and future generations. How do you, and then three, you're balancing sort of various state policies of entities that the state, sort of private entities. So you definitely want to encourage private entities to act in the best interest to meet sort of the objectives of the state, but you can't force them to meet those objectives. So in a way, if you're trying to minimize the costs of meeting the 2050 goals, you offer PSEG what the board determines is a fair subsidy amount, if a subsidy is required. You also plan for sort of meeting resources to sort of clean resources to meet the state's goals, because the 7,500 megawatts of offshore wind planned for New Jersey, that will have, like the nuclear plants, they will have benefits for the economy, for jobs, for sort of, it will have impacts on ratepayers, but it will also have economic benefits. It will have clean energy benefits. It will have carbon benefits, environmental benefits. So it's balancing what you can get out of, what's the most you can get out of at the least cost. If it turns out that a subsidy is required, you find out what the least cost of that subsidy is for the nuclear power plants.
Okay. I want to make it clear that we're here to try to get answers. And I'm sure I'm speaking for my colleagues, and if not, they will certainly let me know that none of us have made a decision. We're trying to get as much information as we possibly can in order to make that decision. And we are trying, again, to weigh everything that's in play here. Primarily, the ratepayer and the reliability. So it's vital for us to get as much input as we possibly can. And I thank the expertise of you, Mr. Chang, and other witnesses that we have heard today in order to help us to make an intelligent, non-emotional decision. So I appreciate your input. Do any of my colleagues have questions for Mr. Chang?
Yeah, Mr. President. Thank you, Mr. Chang. This process you described as integrated resource planning, we do live in a restructured state. Usually in a restructured state, the integrated resource planning is done by the independent system operator, in our case, that is PJM. So we are in this predicament because of the legislation that was passed. Is that correct?
That's absolutely correct, Commissioner. I mean, it is, you're absolutely right that IRPs are generally in vertically integrated states where the utility has control of sort of the generation, sort of aspects of the generation, and the utility commissions sort of can see all of that. And you're absolutely right. Unfortunately, New Jersey is a restructured state, so you're acting on market forces. You're acting on, you need to sort of account for the fact that resources are going to be merchant generators, and they will have a different objective function potentially than what the state has.
So I'm an electrical engineer by profession. When you talk about electrons, I mean, earlier we were talking about electrons. Can you pinpoint which electron is produced by carbon and which one is not carbon free? Is that possible? That's flowing into New Jersey. Yeah.
Yeah. Well, once that electron is being generated from, from the generator from a wind turbine or from the generator from a coal-fired unit, once those electrons go into the wires, no, you can't.
Now, is usually that also carbon pricing was talked about earlier. Is carbon pricing agnostic to technology?
In a pure, I mean, is it agnostic? Yes, but will it have an impact on different, will it have a different impact on different technologies? Absolutely.
Also, these reactors, three reactors we're talking about, Salem 1, Salem 2, and Hope Creek. I think one of them is due for relicensing in 2038. Another one is doing 2040. Is there a guarantee anybody have that they will be relicensed? I mean, assuming that they're still operating.
No, there's no guarantee. I mean, that's a choice that PSEG will make, whether or not it's in its economic interest to relicense those units beyond the 60 years that they currently have. If it's in their economic interest, that whatever sort of capital expenditures they will need to make, or just the relicensing fee process, if they think they will make up those costs during the second sort of extension period, then yes, if it's in their economic interest, they will probably relicense. If it's not in their economic interest, then we shouldn't expect them to relicense.
Yeah, so there's no guarantee that they'll be around till 2050 or beyond. There is no, because you have to also get the Nuclear Regulatory Commission to issue the license. Sometimes they may not, because if the plants don't meet the licensing requirement. Is that correct?
That's correct. The NRC has to approve the license extension. I think Dominion has filed an extension for its plants in Virginia. I think Exelon may have filed one for Pebble Beach in Pennsylvania, but that process is, and I think FPL has filed one for Turkey Point, sorry, in Florida. So that process, it's sort of an ongoing process that depends on when the license expires for the units. I believe the NRC is requiring 5 years before, but I think some of the operators are proposing a 3-year sort of notification for that process. But you're absolutely right. There is no guarantee that
Are you aware of any other states, where a nuclear plant was closed and was replaced with battery storage or something like that? I was told California has done that. Are you familiar with that?
I'm not directly familiar with the California case, and I'm not familiar with sort of yes, nuclear plants have retired in a number of states in the last few years. I am not aware of specifics. I do know that in the case of Vermont, when Vermont Yankee retired, Vermont, which happens also to be somewhat a vertically integrated state, they did do a number of contracts with Hydro-Quebec for hydropower to replace the output for Vermont Yankee. But other than that, I don't know.
Also, Mr. Chang, are you familiar with the Regional Greenhouse Gas Initiative that is New Jersey rejoined?
I am familiar with it, but not completely an expert on that.
Yeah, because that's a carbon cap and trade, and I think carbon pricing fetched about $3 or $4, maybe $7. So, I mean, it's never gone north of $7 so far. So that's just wanted to bring to your attention on that. Yeah, okay. Thank
That's
you, Mr.
correct.
President. No further questions.
Yes. Anyone else?
Mr. President,
Yes, sir.
just to follow up on a earlier conversation about how we can achieve our 2050 goals. Mr. Chang, first of all, thank you for being here. In your report, you looked at the modeling exercise that had been undertaken as part of our energy master plan. And you discussed one option called Variation 5, which examined whether we could achieve our clean energy goals without the nuclear plants. Could you elaborate a bit on that?
Sure. And to be absolutely. So variation 5, I believe, was the only variation that Rocky Mountain Institute modeled where the nuclear units weren't assumed to be around until 2050. That variation 5 assumed that the licenses would, the units would retire when the licenses expire. So I think 2038 or 2036 for, I can't remember, yeah, 2036 for Salem 1, 2040 for Salem 2, and 2046 for Hope Creek. So that's the reason why I picked that particular variation in my testimony, but it's not looking at retiring those units sort of earlier or later. It's just that's the only variation that had any sort of retirements whatsoever in the EMP.
So presumably, if I'm analyzing this properly, if those nuclear plants were to retire earlier, it would be more difficult to achieve the 2050 goals.
It's those, all things being equal, quite possibly. The EMP also didn't include the 3,500 megawatts of additional offshore wind that the governor announced a few months ago. So it only had the first 3,500. It didn't have the second 3,500. So, you know, it's a question of, and it's also, they were assuming battery storage coming into becoming more prominent in 2045. So is it fair to say that if you changed only the nuclear retirements without changing any of the other scenarios, then yes, it would be harder to sort of meet the 2050 goals. But if you retire the nuclear plants earlier, but also change the parameters of renewable technologies, and sort of touched on that this morning, that the landscape is changing rapidly. Who knows if it would be more expensive, harder, cheaper to meet the state's goals.
And as I recall, I'm sorry. And as I recall, that additional 3,500 megawatts of offshore wind is sort of the same order of magnitude of generating capacity of the nuclear plants, isn't that right?
On a nameplate capacity, that's absolutely correct. The PSEG did ask me across whether or not there's a difference in capacity factors between wind and offshore wind and nuclear, and there is. I mean, 3,500 megawatts of offshore wind at a 60% capacity factor is going to produce less energy than 3,500 megawatts of nuclear at 90% capacity factor.
Right. Okay. All right. Thank you very much. Thanks.
Any other questions?
Yeah.
Thanks.
Yeah. You know, as you just pointed out, you know, the capacity factors are significantly different. And I think Commissioner Holden had also talked about this issue and what that means as to cost, reliability, and also should we be taking into account, you know, should these nuclear units not continue to operate and we go to these other forms of renewable energy, or even with outside of PJM, the significant transmission costs that are, going to be baked in to, what our ratepayers are going to be responsible for. Shouldn't that be something that we are looking at when we're evaluating the $10 rec?
From a long-term perspective, absolutely. This is where this sort of touches upon a little bit of the conversation I had with the president, is that what you're being asked to evaluate is a very narrow set of circumstances.
Yeah, but even within that narrow circumstance, if you look at the price, just comparatively speaking, what we've paid for other forms of clean energy, you're familiar with the rates that we've been paying, for that same attribute in New Jersey, and comparing that to what's being requested with this rec, significantly less, wouldn't you say?
I have not done an apples to apples comparison of the various sort of offshore wind, the solar rec, or the nuclear. So I don't know.
But I'm just saying, something that we should at least take a look at when doing our evaluation, cost comparisons with respect to the different technologies, and then the incumbent transmission costs combined in terms of that evaluation.
Oh yeah, absolutely. I think the other point that I was making earlier was that if you were to do you almost need to do something like an integrated resource plan to compare all of the policy choices that the state has to consider, and look at them sort of head to head, and look at them at a time frame that is appropriate for the state. So yes, I agree, absolutely.
Something that we're sort of in the process of doing, but thank you.
Yes, we are. Thank you, Commissioner. It's as a board, I would suggest that we have to look at what is in front of us currently. That we can't necessarily base our decision on future unknown events. We would like to think that we will have 7,500 megawatts of offshore wind by 2035. When we're dealing with projects, as you well know, Mr. Chang, there are always delays, unfortunately. We have the best intention and going forward, and we assume that it's going to work smoothly. But we also know that in our personal lives, that it not necessarily works smoothly all the time. So we have to look at what is currently before us. Would you agree with that?
Yes, and as I stated earlier, you have information before you of a range of revenues. You also have before you a range of costs. What you could do is you could take, I think Mr. Craig offered this now sort of the dollar cost average in his cross-examination this morning. You could, if you wanted to, sort of recognizing that prices will go up, forwards will go down, forwards will go up, you could take an average of what you have before you, and the same with the costs. You can determine what costs are appropriate, what costs you should consider, and then if those numbers match up, that may give you some result of a need for subsidy or not need for subsidy. So yes, it's a very difficult position that you're in, but you do have numbers that provide a range of estimates that you could sort of say, well, we don't think it's going to be the high, we don't think it's going to be the low, maybe it's the average, maybe we take the average. And that's without getting into sort of distribution functions, like is it, but that's a whole nother issue.
Right. Well, Mr. Chang, I want to thank you again for your expertise and for giving us the information. Yes, who's talking to me?
I apologize. It's Grace Park. I didn't mean to interrupt at all. Could I just ask one last
But
question?
you did, Ms. Park.
I apologize.
No, you don't have to apologize. I'm teasing. Go on.
And just to be clear, Ray Council will have some redirect, not may, will have some redirect.
Sure. No question. I didn't forget you, Mr. Lippman.
How could
How can I forget you?
Would you let me ask just one more question?
Sure.
Mr. President? Okay. Mr. Chang, and just, on these comments and questions that have been asked, there's been some questions asked about the offshore wind, the 7,500 megawatts of offshore wind. Assuming that the offshore wind is at some point, and we're still years away of that, comes to fruition, and these nuclear plants would shut down, wouldn't that still result in a backward step in meeting the state's 2050 clean energy goals?
It depends on, well, I think it depends on the timing. It depends on the timing of when the offshore wind comes online, when the nuclear plants retire. So I can't say it is yes or no. I would have to say it depends on what other inputs, what other factors. I mean, for that matter, if New Jersey becomes suddenly very aggressive on energy efficiency, maybe load will come down. Or if New Jersey embarks on electrification, load may go up. So I'm not going to, I can't give you a yes or no response based on the information that I don't know that I have.
So the variation 5 that you were referring to earlier in the Energy Master Plan, that assumed that the nuclear plants would run to the end of their current license. Isn't that right?
That's correct.
And the offshore wind that you're talking about, you agree that the capacity factor for the offshore wind is significantly lower than the nuclear plants.
Yes.
And what you would be doing and what you're suggesting is that you could potentially substitute one form of clean energy, offshore wind, with another that has a lower capacity factor. Isn't that right? Through your argument?
I didn't say, so I haven't done the analysis, and I didn't say that I wasn't suggesting that you're doing a one-for-one switch. I'm just saying that if there is, when Commissioner Gordon was asking about the 3,500 megawatts, sort of on paper, that's the difference. Something that has a 60% capacity factor versus 90% capacity factor with the same nameplate capacity, you're going to have less energy. And then I'm not suggesting that variation 5, if you swapped out when the nuclear units retire and you put in 3,500 megawatts of additional incremental offshore wind, I'm not saying that that's going to come out to be the same. It's just, that's just one factor to consider.
But still a backward step. You're replacing one form of clean energy with another that has a lower capacity factor. You're not meeting those goals. Isn't that right?
Yeah, I mean, to the extent that your hypothetical is, and that your hypothetical is replacing that one parameter, then yes. But I'm saying it's much more complicated than that.
Okay, no further questions. Thank you, Mr. President, for your patience.
Ms. Park, that was a very long one question.
Again, thank you for your patience. I didn't know at the time it would lead to other questions.
I understand. No, you don't have to explain. I understand. I want everybody to have their opportunity and day in court, so to speak. So I watched a lot of Perry Mason in my day. So I think, and I'll get to you, Mr. Lippman, so don't worry. I didn't forget you. How can I forget you? I think it's one thing we can all agree upon is that we're all trying to do the right thing. And what that right thing is comes down to individual decisions. And we're all trying to do the right thing in the name of the industry and in the name of the ratepayer. So I appreciate all of the input and the expertise. I know I have learned a great deal today. Mr. Lippman, any cross?
Well, redirect, yes, and I'm going to hedge and not say one question.
I'm sorry, redirect. I forget some of my legal terms. I apparently forgot that to go to that class in law school.
You made all the other ones, right?
No, I think I missed those two.
I'll leave it there for now. So, Mr. Chang, I'm going to direct you back to the conversation you had with Ms. Park about forward capacity prices. And I'm going to ask you first, are you familiar with the FRR proceeding that's currently pending before the board?
I am.
And did PS put forth a capacity price, a projected capacity price in that matter?
They provided a capacity cost for their nuclear units in that matter. That's correct.
And
Based
without,
on,
I was going to say, without giving out any confidential information. I'm sorry, finish what you were going to say.
yes, I was going to say that capacity price in that proceeding is not confidential, and it is the clearing price from the last BRA of $165.73 per megawatt day.
Okay, now I'm not sure if you can answer this question without violating confidentiality, but is that higher or lower than the capacity price put forward in this case by PSC and PSEG?
I'm gonna, it is different than the capacity price than what was put forward by PSEG in this proceeding.
I think, well, I don't want to put us in a confidential session just for this, so I'm going to leave it at that for that question. I do have one other set of questions and then I will be done. Going back to the emissions issue, you were asked that you drew a box around New Jersey when you calculated your emissions. Do you remember that?
Yes, I do.
Can you describe the box that PSEG used when they calculated their emissions?
Subject to check. Actually, it is a much larger box than what I used. I think their modeling included all of the Eastern Interconnect in their analysis.
And just to be clear, what can you describe the Eastern Interconnect for us?
It is basically, yeah, geographically, it's basically all the states east of the Mississippi.
So it's PJM and more, correct?
Yes, PJM and basically, yeah, PJM and more.
And now I'm going to rely on Ms. Park. If you could put your exhibit back up, if you don't mind, of the statute that you had, that you were questioning Mr. Chang on?
You're talking about the legislation?
Correct.
Actually, I no longer have it up, Mr. Lippman. Hold on.
I'm sorry. I suspected it was faster for you to pull it up than me. I apologize.
Not a problem. Here you go.
Okay, and I think where we want to be is page 3 is where you were questioning him. I could be wrong. That
This is page 3.
you were questioning on B1, if you recall. I would like to look at the next piece, which would be B2. So it might have been there. We can look at 2. Mr. Chang, if you could look at what's B2 now on the screen in front of you.
I can.
And I'm not going to make you read the entire thing, but if you read after the third line, after the ozone national ambient air quality, can you read after that comma?
Sure. And the abrupt retirement of nuclear power plants that serve New Jersey, combined with increased reliance on natural gas-fired and coal-fired generation, will substantially impede the state's ability to meet those federal state air quality standards and emission level requirements.
So the statute was looking at air quality in New Jersey.
Yes, the state's ability to meet those federal and state air quality standards.
That's all I have. Thank you, Mr. President.
Oh, thank you, Brian. Can we, Ms. Park, do you mind taking down this share screen? Thank you. Okay. If there are no other questions, I think we have come to the end. I want to, as I said before,
Pardon me, Mr. President.
who's asking me here?
This is Ken Sheehan
That
speaking.
sounds like a Sheehan to
Yes,
me.
sir, Mr. Sheehan.
We do have, staff needs to put forward their witness from Levitan.
I'm sorry, I forgot that, didn't I?
Just no oversight, just wanted to catch that. Thank you, sir.
No, I have a good memory. It's just a little short. Does staff have any witness?
Yes, Mr. President. Board staff would like to call Seth Parker.
Okay, Mr. Parker? Would the board attorney, or not the board, the reporter, please swear in Mr. Parker?
If you could raise your right hand. Do you solemnly swear the testimony you're about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you.
Mr. Parker, would you state your name for the record and your affiliation?
Certainly. Seth Parker. I'm a vice president and principal with Levitan and Associates.
Thank you, sir. All right, Mr. Sheehan?
Thank you, Mr. Parker. Has a
That
Levitan...
doesn't sound like Mr. Sheehan. Who am I looking at here?
Deputy Attorney General Matt Koelik.
All right, Mr. Deputy Attorney General, go for it.
Thank you, Mr. Parker. Mr. Parker, has Levitan and Associates prepared preliminary eligibility reports for the Salem 1, Salem 2, and the Hope Creek units?
We have.
Have you supervised the creation of those reports?
I have.
Has Levitan and Associates also responded to written cross-examination questions from P3 and PACG related to this matter?
We have.
And have you also supervised the provision of those the responses to those questions?
I have.
With thank you, Mr. President. Also, in addition, are there any changes or alterations that need to be provided to your testimony or to the reports?
Yes, and to be clear, we did not provide testimony, only reports on each of the 3 plants. Our reports were labeled preliminary and filed on January 19th. When we produce our final reports, We expect to make a couple of corrections with regard to capacity prices and our discussion of PSEG's claimed cost of operational risk. And we'll be making some other minor miscellaneous changes as well.
Thank you, Mr. Parker. Mr. President, board staff would like to propose to mark the exhibits from Levitan and Associates with relation to this, to the Salem 1, Salem 2, and the Hope Creek reports. Board staff would like to mark these as S1, S2, and S3 respectively.
Without objection, so marked.
Additionally, board staff would also like to mark Levitan and Associates' response to P3's cross-examination questions as S4 and the response to PSEG's cross-examination questions as S5.
Without objection, so marked.
All right. Thank you, Mr. President. And at this time, board staff would like to make Mr. Parker available for cross-examination.
Thank you, Mr. Attorney, Deputy Attorney General. PSE&G, I would assume you have some questions.
Yes, we do. Thank you, Mr. President. This is Matthew Price, so you can find me on your screen. Good afternoon, Mr. Parker. My name is Matthew Price, and I represent PSEG, and I'll be
There you are.
conducting the cross-examination. Can you please describe your role in preparing the report that Levitan Associates submitted in the case?
Yes, as I mentioned earlier, I supervised the work of a number of LAI staff, including my colleagues, John Bittler, Richard Sweet, and Ed Sikarai. But I paid particular attention to the cost side of PSEG's certified financial projections, as well as focusing on whether other requirements of the ZEC Act and the board's order were adhered to.
And I saw that Mr. Sweet was also designated as a witness for staff today. What exactly was your role in relation to Mr. Sweet's? Just so I can make sure I'm asking.
Yes, I relied upon Mr. Sweet for the number crunching, the calculations that went into the tables that are in our report. They get quite complicated very quickly with a lot of moving parts. If necessary, I would call upon him to help me if we get into some of these specific numbers.
Okay, thank you. Just stepping back generally, did PSEG answer all of your questions in this proceeding? Or does it refuse to answer any questions that Levitan posed to it?
They provided answers. I can't say offhand whether they were all satisfactory or not.
Okay, but to your knowledge, it didn't refuse to answer any questions?
No.
I want to ask as well, the three nuclear plants at issue here represent about 40% of New Jersey's electricity generation. Is that correct?
I believe that's correct.
And that's based on 2019 data post the retirement of Oyster Creek, correct?
Subject to check. I think it's correct.
Now, earlier today, the question of whether the plants could be sold arose. Do you recall that colloquy?
I do.
And you heard Mr. Craig say that PSEG has not put the nuclear plants up for sale, correct?
Correct.
And you heard him say that PSEG hopes to be able to continue to operate these plants over the long term if there's a long-term solution for the plant's finances, correct?
I did hear that.
And that's why we're here ultimately, to evaluate PSEG's application before the board so that it can continue to operate these plants, right?
Yes, but as we pointed out in our report, even if the board decides to approve the full ZEC payment to PSEG Nuclear for their three plants, that's no assurance that PSEG Nuclear will continue to operate those plants.
Is it your understanding of the ZEC law that if PSEG were to take the ZECs and then retire, that PSEG would need to pay back all the ZEC revenue it received unless the circumstances of the retirement are ones that are specifically defined in the statute?
I'm not sure, Mr. Price, if you've read the ZEC Act correctly there.
Okay. Well, are you a lawyer anyway? I suppose not. It's a question for lawyers. Let's see. Now, you heard Mr. Craig say if the board doesn't award a $10 ZEC, the PSEG will shut the plants down, correct?
Yes, I heard that.
But you heard other witnesses suggest the possibility of a sale, right?
I've heard discussion, yes.
Would you agree that if the plants were sold, the winning bidder could well be a party that wants the decommissioning trust fund and would shut the plants down, as Mr. Bowring described earlier?
Well, I think that would be a different type of sale. Some buyers would be interested in continuing to operate it. Some buyers would be interested in undertaking the decommissioning.
And that's happened for other nuclear plants, though, hasn't it? That a buyer
Yes.
has bought the plant to decommission it.
Yes.
And do you know whether the sale of the nuclear plants would be outside the BPU's authority to review, including whether PSEG would sell the plants to a party that would manage the decommissioning and decommission the plant for financial gain, as Mr. Bowring described?
I have no knowledge.
Okay. And are you aware of how much advance notice a nuclear plant must provide to PJM before deactivation?
I don't know off the top of my head. I don't think a nuclear plant is any different from any other plant in that regard.
Does 90 days sound right to you, or are you just unsure?
Well, are you suggesting 90 days prior to the start of a base residual auction, or something else?
90-day notice prior to deactivation.
I have no knowledge of that.
Okay. You would agree, wouldn't you, that if the nuclear plants were to retire, that carbon emissions would increase?
All other things being equal, yes.
Indeed, I think over the 3-year period of the ZECs, you indicated that carbon emissions in New Jersey alone would increase around 13%, that's a reasonable projection?
What we did was review the analysis that PSEG had PA consultants conduct, where they modeled the retirement of the plants. And as you can see from page 11 of our report, that is what PA found. And we think that's a reasonable result.
And you would also agree, wouldn't you, that it would be impossible to replace the output of the nuclear plants with other forms of clean energy during the 3-year period of the ZECs?
I couldn't say.
Would you agree that if the state tried to replace the output of the 3 plants with subsidies for offshore wind or solar, that the cost would be significantly greater than the $10 ZEC?
They certainly could be, but we have not done that calculation. And I don't think you'll find that addressed in our reports either.
And if the state were to try to replace the output of nuclear generation with other forms of carbon-free generation, you would agree that then it wouldn't be replacing fossil generation with that other forms of clean generation, right? It would be trading clean for clean rather than displacing fossil with additional clean, correct?
I'm sorry, could you restate your question?
Sure. You would agree that if the state were to try to replace the output of the nuclear plants with other forms of clean generation, such as offshore wind, then that offshore wind would be replacing other forms of clean energy rather than replacing fossil fuel energy, correct?
I guess I'm a little mystified by your question, since your premise was that the nuclear plants would be replaced by offshore wind generation. So I'm not sure why the offshore wind generation would then displace fossil fuel generation.
Well, I guess my point was that it wouldn't, right? If we have a new offshore wind plant come on in 2025, and that we're now replacing the nuclear plants with that clean generation, provided by offshore wind, then the offshore wind is not substituting for fossil generation, right? It's just replacing the clean generation that would have been previously lost from the nuclear plant retirement.
Well, that's an overly simplistic way of looking at it. I mean, the fact is, as has been mentioned many times in this hearing, that a nuclear plant runs base load. Once you start it up after a refueling outage, it's to everyone's advantage and certainly to the operator's advantage to keep it running close to 100% output. Whereas an offshore wind project might have a capacity factor around 50, 55%, something like that, but it will be intermittent. So you're kind of mixing apples and oranges there.
Are you familiar with PSEG's submissions describing that customer costs would increase if the plants were to retire relative to keeping the plants in operation with the $10 ZEC?
I'm not familiar with that.
Okay, there's nothing in your report disputing that then, is there?
There's nothing in our report addressing that.
Okay. Now your report, as I read it, identifies 4 areas of disagreement with PSEG's application. The first was projected energy revenues based on updated forward energy prices. The second was projected capacity prices. The third was the cost of operational and market risk. And the fourth was spent fuel costs. Is that a correct summation of where your report parts ways with PSEG's application?
Yes, and I wouldn't put it in the context, well, I wouldn't term it as parting ways. We're just trying to make sure the board has enough, the board has as broad and thorough discussion of the issues before they make their decision.
I appreciate that. Thank you. Let me start with forward energy prices. Is it correct that you proposed using forward energy prices as of September 28th, 2020?
No, that strictly speaking, that's not correct.
What did you propose with respect to forward energy prices?
We didn't propose anything, and a careful reading of our report would have indicated that what we did was we offered 2 alternative energy price forecasts that the board could consider in making their decision. One was as of the end of September, and I believe the other one was as of the end of December. And we provided the results for both of those dates. We did not recommend one or the other.
Thanks for that clarification. I appreciate it. Would you agree that the forward energy prices have fallen since the beginning of 2021?
Just in the last 2 months and change?
Correct.
I'm sorry, I haven't looked at that data. I don't know.
Let me, if you wouldn't mind sharing my screen, and I'll put up something that I showed earlier as well. Let me make sure to find the right file here for you. Thanks for bearing with me. Are you able to see that graph?
I can.
If I may, I'd like to mark this. I think we're up to PS8.
Without objection, so marked.
Thank you. This depicts the PICO planning year 23 through 25 round-the-clock forward prices, the average of the 2 years. Would you agree that this demonstrates that the forward prices have fallen since the beginning of the year?
Thank you. That's much better. I appreciate that. Sure. Yes, in that short period of time, I would agree. I would also point out, however, these are forward prices for 2023 to 2025?
That's right. I believe it's an average of the 23-24 and 24-25 years.
So these are collapsed into single values as of each of these dates on the x-axis. Is that correct?
That's correct.
Well, assuming that someone did the calculations correctly, I would agree with you.
And indeed, the prices as of March 1st are even a little bit lower than they were as of the end of September, based on the graph. You agree?
Yes. I mean, again, assuming that someone did the calculations correctly, I would agree.
Okay. I'd like to next ask you about your projections for the plant's capacity revenues. Now, would you agree that well, let me ask you this first. Would you agree that the capacity revenues realized by the plants are a function both of the capacity price as well as whether the plants clear the market at that price?
Yes.
And so if they don't clear the market, they don't get any capacity revenue, correct?
Correct.
And are you aware of the expanded minimum offer price rule that FERC has imposed on the PJM market?
In general, I am.
And that new rule prevents state-supported plants from bidding in the capacity market below a floor level set by the independent market monitor, correct?
In general, that is correct.
And isn't it the case that in light of the expanded PJM minimum offer price rule, there's some risk that the plants wouldn't clear the capacity market within the period of the ZEC?
Yes.
I want to talk next about the capacity price forecast. I think you indicated at the beginning that there would be a correction on that issue.
Yes.
And I wondered if you could please explain what your correction would be.
Certainly. The 3 nuclear plants are in the PSEG zone, but as somewhere in one of the filings made by PSEG Nuclear, it was pointed out that because they are connected to the 500 kV transmission system, they do not receive PSEG capacity prices, they receive EMAC capacity prices. So we will correct our report to utilize the EMAC price that the board included in their offshore wind round 2 solicitation guidance document.
And directionally, the impact of that change is to reduce the capacity price projection. Is that right?
Correct.
And that's because the PSEG zone has cleared, at least in the last BRA, above the EMAC zone?
It's not that they cleared in the last BRA above the EMAC zone. It's that the prices that the board decided to use for their offshore wind round 2 evaluations have a higher price for PSEG than EMAC, and we'll be using the lower EMAC price.
Okay. Now your capacity price projections are still based on historical prices. Is that correct?
We have not looked for the purpose of this ZEC for these ZEC reports at historical prices. What we wanted to do was to see if the board had adopted forward-looking capacity prices that they are using for contemporaneous resource procurement evaluations. And sure enough, in the guidance document for the offshore wind round 2 solicitation, they provided those prices. And that's all we did.
Are you aware that the board's prices in the offshore wind scenario were based on historical BRA clearing prices?
I might be, but I don't know that it's relevant to this matter.
Well, the purpose of this matter in part is to try to figure out what the economics of these nuclear plants look like. You'd agree with that, right?
Yes.
And capacity revenue is an important component in the economic viability of these plants. Wouldn't you agree?
I would, and I would also point out that it's very difficult to forecast with any certainty what future capacity prices will be. As other witnesses have pointed out, PJM has been delayed in running their BRAs for the next 3 capacity auctions. all the best calculations, most sophisticated calculations in the world are no guarantee that someone can forecast these prices accurately. So since the board has already published prices that they'll be using for these same 3 years in their offshore wind solicitation guidance document, we thought it was sound to utilize those same prices for this ZEC 2 procurement. I'm sorry, not procurement, evaluation.
And let me ask again, because I'm not sure I heard the answer, but it's your understanding that the prices that the board used in the offshore wind procurement were based on historical BRA clearing prices, correct?
I believe that's the case.
And when was the last capacity auction held?
Whew. I don't know. I think on the order of 2 or 3 years ago.
Was it May 2018? Does that sound right?
That sounds about right.
So here we're almost 3 years later, and you would agree that things have changed in the last 3 years, right?
Things have changed with regard to what, may I ask?
Well, specifically as part of its quadrennial review, PJM has changed features of its capacity market design. Would you agree with that?
Yes.
Would you agree that PJM has reduced its estimate of the net cost of new entry since the last BRA?
I believe that's the case, but I have not evaluated that for the purpose of this ZEC 2 proceeding.
Would you agree that all else being equal, that would tend to reduce the height of the demand curve and thereby lower the clearing price?
Again, that may well be the case, but I have not evaluated that for this hearing.
Is it true that PJM has also shifted the demand curve itself lower by 1%?
They may have, but I have not evaluated that for the purpose of this hearing.
If they had, you would agree that that would also tend to lower prices, wouldn't you?
In and of itself, it would. I don't know if there are other changes that might offset that. We have not evaluated changes to PJM's RPM process and how that would influence future capacity prices for the purpose of this ZEC hearing.
Let me ask one more question about a change. Would you agree that the import capability for resources into the EMAC zone, as reflected in the calculation for the capacity emergency transfer limit, has also increased since the last BRA?
I believe that's the case, but we have not evaluated that for the purpose of this ZEC hearing.
But wouldn't you agree that if more resources can get into EMAC, that all else being equal, that change would tend to lower capacity prices?
Yes.
And the historical capacity prices don't reflect any of these changes, correct?
Correct.
But it sounds like you agree that these changes could together have a downward effect on capacity prices in the EMAC zone.
I suspect that there are a lot of changes that could affect prices, capacity prices in the EMAC zone. We have not evaluated them. So in the narrow context of your questions, these changes could depress prices. But I think if you really wanted to take a broader, more thorough look, it might warrant that type of evaluation.
Are you aware that PSEG has provided that kind of evaluation in its application materials?
I am.
And your report doesn't call into question any of its conclusions regarding capacity price forecast, does it? And I don't want you to get into confidential information in your answers. Talk further about
I don't see how we could have, since that capacity forecast explanation was provided with witness Craig's testimony, which was dated January 29th, and our report was produced dated January 19th. So without having a crystal ball and peering a week and a half into the future, I think it would have been very, very difficult for us to evaluate that capacity forecast that was provided by PSEG.
Do you, well, let me ask you this. Are you aware that Levitam and Associates submitted a report in the board's recent OREC proceeding?
I'm sorry, in the board's,
recent OREC procurement proceeding?
I think if you're referring to a report that we prepared, I think it was dated June 2019, I am.
Were you involved in preparing that report?
I was not.
Have you read the report?
I have.
Are you aware that in that report, Levitan and Associates prepared projections of capacity revenues?
Well, I'm generally aware, but again, it had no bearing on the substance of our work in this proceeding.
Isn't the substance of your work in this proceeding in part intended to provide the board with an accurate estimate of what future prices will be, to be able to accurately assess what the financial need of the nuclear plants is?
For the purpose of establishing capacity prices that the board should utilize to evaluate the ZEC 2 applications. And I'm sorry, but I'm repeating myself. We suggested that the board utilize the prices that were published in the offshore wind round 2 solicitation guidance document. We did not come up with an independent forecast of capacity prices for the purpose of this ZEC 2 hearing.
In the offshore wind report that you prepared, your forecast did not just average historical prices. They made a projection based on changes in the market, among other things, correct?
I have no opinion, no concept.
Let me show you that exhibit, which we provided to the parties on Thursday. And I think we're up to PS9 right now, although to be honest, I'm not sure, but I would ask that this be marked as PS9 if indeed that's the next number in order.
Okay, without objection?
Thank you.
So
Is
far.
this the report that we've been discussing?
I believe so.
Let me move ahead to oops, right past it. To this graph, figure 6. Can you see that?
I can.
Would you agree that the red line here, which I think runs together with the green line, sorry, the green line, the green solid line reflects Levitan and Associates projections for capacity prices in the EMAC zone?
It appears to be that way, yes.
But the board's projections are the dotted green line that look to be essentially a levelized return over the 25 years of the offshore wind contract, correct?
I will accept your premise that the dotted green line, it was the board's projection at that time, 2 years ago, but I have no idea how they arrived at those prices.
That's fair. Now, is it your opinion that it's more accurate to use historical figures that are the most recent of which is now 3 years old, as opposed to creating a projection that reflects market changes that might have occurred in the interim?
I have no opinion.
Why did Levitan bother creating a capacity price projection in the offshore wind proceeding, if not to try to come to some more accurate projection of what capacity prices would be than mere reliance on historical figures?
I have no opinion.
Would you agree that the capacity price projection that Levitan prepared in the offshore wind proceeding for the years that are relevant for this ZEC period is substantially less than the $170 per megawatt day that you identify in your report for this proceeding?
It certainly appears that way.
Take that down. Now, in your written cross answers, you said that using historical capacity prices to project future capacity prices would have the advantage of maintaining consistency among the board's evaluations of bids in response to its power solicitations. Do you recall that?
If you can point me to the question, I have the document in front of me.
Sure. Let me find it for you. I believe it's your response to question 1.
No, I think you're putting words in my mouth. I didn't say anything about the benefit of using historical prices. What I would say, and I'm reading directly from my response, is that LAI recommended that the board utilize the capacity forecast contained in its September 2020 New Jersey Offshore Wind Solicitation Number 2 guidance document. This would have the advantage of maintaining consistency among the board's evaluations of bids in response to its power solicitations. So to answer your question, I did not say anything about the advantages or disadvantages of using historical prices.
Okay, I think in my question I was quoting what you said here. So I apologize if I misspoke and put words in your mouth. That wasn't my intention. My intention was to quote this precise phrase. In any event, in the offshore wind proceeding, the generator was receiving an all-in price in that proceeding. Is that right?
I can't say for sure.
If the generator were receiving an all-in price, would you agree that it would be indifferent to capacity price projections prepared for the procurement?
Well, they might be, but the board and the state would not be, because they would be paying the difference.
I understand that. PSEG here is not receiving an all-in price, correct?
Correct.
And so from the generator's perspective here, isn't it the case that accurate capacity price projections matter to the generator in its decision-making in a way they didn't in the OREC proceeding?
Well, certainly it matters, but again, at the risk of repeating myself, it's very, very difficult, and I'm sure every consultant will say this, as well as plant owners. It's very difficult to forecast capacity prices with any accuracy. So yes, it's important, but it's kind of moot, because you can do the best you can, but no one would claim that their forecast is going to be more accurate than another person's forecast.
But in the offshore wind proceeding, Levitan did indeed prepare a capacity forecast, didn't it?
Yes, we did.
It didn't just rely on the historical prices.
Well, you're asking me about a document that we did not rely upon in our report. And it may be that Levitan relied in part on historical prices to produce their forecast. I don't know.
Let's discuss next the risks and cost of risks. In your opening remarks, you referenced that Levitan would be changing its assessment of operational risk, and I was hoping you might be able to identify in what way that's changing.
Certainly. Without divulging confidential information, PSEG supported their cost of operational risk based on adders that PJM allows plant owners to include in their energy and capacity bids. And in commenting upon PJM's allowable capacity price adder, we stated that the adder is to account for the uncertain impact of inflation, and we'll be changing that or deleting that statement.
In utility rate making, you would agree that utilities are permitted to return to a return on equity, correct?
As witness Crane, I think, pointed out, they're entitled to have the opportunity to earn a determined return on equity, correct?
And as a general matter, investors expect businesses to generate a return commensurate with the return that investors can earn from other investments with a similar level of risk. Would you agree?
That's more or less correct, yes.
And would you agree that regulated utilities are generally permitted to recover a return on equity of around 9 or 10%?
I have no opinion.
Are you unfamiliar with returns on equity that regulated utilities typically receive?
No, I'm trying to restrict my responses to the subject matter. And in our report, we didn't address return on equity anywhere.
Okay.
I mean, if I perhaps had done a little research and or the scope of our work was expanded to include ROEs for PSEG Nuclear and their plants, I would have been very happy and equipped to answer those questions.
I understand. Well, let me just ask you one more question on that subject, just drawing on your significant expertise as someone in this area. Have you ever heard of a utility authorized to recover a 4% ROE?
Again, I question the germaneness, but no, I have not.
Or what about a negative ROE?
I question the germaneness of that question, but I have not.
Okay. Well, in your opinion, is the merchant nuclear generation business more or less risky than the regulated utility business?
Well, that's an interesting question. Any owner of a single asset, as opposed to a broad company with a lot of different business segments and a lot of different assets, would be more risky. But you're also combining or contrasting a plant that's a merchant plant with a utility that, in return for being granted monopoly status, agrees to operate under cost of service principles, including having a allowed rate of return set. So for a merchant plant, a single plant certainly would have higher risk, but then again, that would entitle them to earn very high returns on equity in good years, and then perhaps they might earn low returns on equity in bad years.
But on average, sorry, I didn't mean to cut you off.
I'm sorry. And then just to complete the thought, whereas a regulated utility, their return on equity would tend to be more stable from year to year.
But you would agree, wouldn't you, that on average, investors in a merchant power business would expect a higher return on equity than investors in a regulated utility?
Well, certainly when you're making the original investment decision, you would expect to earn a return commensurate with the risk of that asset. Once a plant is built, now we're talking about sunk costs, and I'm not exactly sure how return on equity, when we're talking about sunk costs, factors into that equation.
Were you involved in the preparation of the Levitan report in the first ZEC proceeding?
Yes, I was.
Do you recall that report noted that PJM's cone study provided a useful proxy value? And the useful proxy value is a quote, for an appropriate risk-adjusted cost of capital for a merchant power plant?
We did.
And that value was equivalent to a return on equity of 12.8%. Is that right?
I believe that's correct.
And are you aware that the ZEC credit values proposed by Levitan in this proceeding would result in an ROE for each of the plants that is less than 0?
Well, again, I question your wording here. We did not recommend a ZEC payment. Again, we're trying to give the board a thorough, unbiased understanding of how each of the main components that go into this subsidy calculation would affect whether that subsidy should be higher or lower. So quite honestly, we did not do an ROE calculation either based on all of the costs that were submitted by PSEG, or if the board decides to adopt all of the possible adjustments that we laid out in our report.
Let me ask you about the risks identified in the ZEC Act. The ZEC Act defines operational risks to include the risk that operating costs will be higher than anticipated because of new regulatory mandates or equipment failures. Would you agree that once a plant stops running, it no longer faces the risk of new regulatory mandates relating to its operation?
Yes.
And would you agree that once a plant stops operating, it can't have an equipment failure anymore?
With regard to generating energy, that is correct. But of course, a nuclear plant that stops operating still has a lot of spent nuclear fuel responsibilities. So that equipment has to, of course, continue to operate, cranes and trolleys and whatnot.
Of course, but with respect to the generation equipment that actually produces energy, you would agree that once the plant shuts down, there's no risk that that equipment is going to fail and impose additional repair costs on the plant, correct?
Correct.
And you would agree also that an equipment failure can cause an unanticipated outage?
For an operating plant?
Yes.
As with any operating plant, an equipment failure could result in an outage and reduced sales.
And if a nuclear plant experiences an unanticipated outage, you would agree that its costs per megawatt hour of energy produced are going to be higher than they would have been without the outage, right?
As with any plant, if those fixed costs of operating the plant have to be spread over a reduced number of energy cells, then the cost per energy cell number goes up.
Mr. Price?
Yep.
How much longer are you going to be? I don't anticipate taking a dinner break here.
No, I certainly not. I mean, there are a few more topics I'd like to cover, Mr. President, but I will move it along.
Please.
Thank you. Well, these risks that we've all talked about just now, you've said that a plant can avoid by ceasing operation of the plant. So when your report says that the cost of operational risk may not be avoided by ceasing operations, that's just wrong, isn't it?
Well, no, the risk is avoided, but if the cost is not incurred in the first place, then I don't know what the meaning of saying it would be avoided if the plant shuts down. The cost of operational risk and market risk, as we've pointed out in our report, are very prudent and valid and useful planning parameters for a company like PSEG Nuclear. But just because we label them a cost doesn't mean that there's an out-of-pocket cost. So in that regard, by stopping the plant or ceasing operations, the risk ceases. But if the cost was never incurred in the first place, then it's kind of meaningless to say that the cost is avoided. So that's what we were trying to convey. And I apologize if that wasn't conveyed accurately.
Well, when we talk about a risk, aren't we necessarily talking about something that might happen in the future?
Yeah.
And so we don't know yet whether costs will be incurred. We just know that there's a risk that they might be, right?
It could be a cost, it could be a benefit. That's correct.
And you mentioned that you agreed that operational market risks are prudent generation planning and asset management parameters, right?
Correct.
And when PSEG is deciding whether to keep its nuclear units in operation or whether to cease operation, it's involved in the activity of generation planning and asset management, isn't it?
Yes, it is.
So it would be certainly prudent for PSEG to consider operational and market risks in making its decision, right?
Right.
But your report excludes operational and market risks entirely on the ground that they're not incurred costs, right?
Correct.
So even though there are prudent things for PSEG to be thinking about and considering and deciding whether to shut down their plants, you then ignore them entirely in identifying the ZEC amount that is designed to keep them from shutting their plants. Is that right?
Well, I don't ignore them. It's that if the board decides that these costs should be included in determining the right level of ZEC revenues for the plants, then it results in one set of values. If the board decides that because they're not really incurred costs, they are certainly risks, but they're not out-of-pocket costs, then what we also provided was revised subsidy calculations without those cost of operational and market risks.
And in the ZEC 1 proceeding, you made a similar observation that operational and market risks were not incurred costs because they were risks that might or might not occur, correct?
We did, it's not because they're risks that we did not consider them as costs. It's because there's no out-of-pocket payment being made. So yes, there's a risk, and yes, it could be costly for PSEG nuclear. On the other side of the coin, it could be beneficial, but there's no cost per se for operational and market risks.
But again, you agree that they're an appropriate planning parameter for a company to think about when deciding whether to remain in operation.
Yes.
And in the last ZEC proceeding, didn't you also make the argument that the cost of operational risk is a planning parameter, but it's not actually incurred, and that the cost of market risks is not a true cost because it's not a line item in the published financial statements?
I don't have that report in front of me. I certainly may, or we certainly may have reached that conclusion, but without having that report, I can't say.
The board noted in the order for the last ZEC proceeding that it had reviewed the Levitan report and its position that inclusion of operational risks and market risks should not be considered. Do you recall that?
No.
Let me just quickly show you. And I'm cognizant of the time, Mr. President, and I'll be done in just a couple of minutes.
I would hope so, Mr. Price.
Well, I won't bother with the board opinion. Do you recall that the board concluded, though, in the last ZEC proceeding that the legislature was clear and specific and that its intent was for the board to consider operational risks and market risks in its evaluation?
I certainly agree with you that the ZEC Act says what it says, which is that these cost of market and operational risks have to be considered. I also know that the board has some discretion, especially after the first 3-year ZEC period, to give this some consideration. So where the board will come down on this, I don't know.
Okay, thank you. I have nothing further.
Thank you. Market Monitor, any questions for Mr. Parker?
No questions, Your Honor.
Thank you. P3, any questions for Mr. Parker?
Just a couple, Your Honor. Good afternoon, Mr. Parker. My name is Alice Bergen. On behalf of P3, I just have a few questions for you.
Sure.
Okay. In answering PSE&G's cross-examination questions, number 6A, the question was, does Levitan agree that while a nuclear plant is operating, it faces the risk that costs may increase as a result of new regulatory mandates? And in response, Levitan responded, as with any generation plant, a nuclear plant's actual cost may increase above projected costs resulting from new regulatory mandates, correct?
Correct.
Okay. And are you aware that in the IMM's answers to cross by PSC&G, it's on page 7, number 3, subpart P. I'll read the question for you. It asks, does the IMM agree that while a nuclear plant is operating, it faces the risk that costs may increase as a result of new regulatory mandates? And the IMM responded, costs may increase or decrease. Are you familiar with that answer?
I'm not, but I will accept your reading of that answer.
Okay. And in addition, in Rate Council's answers to PSC&G, at question number 7, the question was asked, does Rate Council witness Andrea Crane agree that while a nuclear plant is operating, it faces the risk that costs may increase as a result of new regulatory mandates? And the response given was, yes, although such mandates may not take effect sometime after they're enacted, it is also possible that mandates could reduce a company's costs and or its risks. Are you familiar with that answer?
I'm not, but again, I accept your reading of that.
Okay, so does Levitan agree that risk can decrease as a result of new regulatory mandates?
I think you mean costs. Yes. So yes, costs could decrease, but you bring up a good point, and that is, quite honestly, a new regulatory mandate generally is hardly ever a relaxation. It's usually something that requires some additional dollars to be spent to meet. So yes, costs could go down, but quite honestly, it's more likely, and this is again true for any generation plant, it's more likely that costs will go up. And I'll also just take a minute to point out in my response immediately below that to sub question B, and I'll read my, my response. To the extent that a new regulatory mandate takes some time to be proposed, analyzed, debated, and enacted, the subject generation plant would have advance notice and the mandate would not be unexpected. So it would be rare for any plant, including a nuclear plant, to have something significant surprise them. It's usually the result of a long regulatory process that gives all parties a chance to plan for it in advance.
Okay, thank you. That's all I have.
Thank you.
You're welcome.
New Jersey large energy users, any questions for Mr. Parker?
No questions, Mr. President.
Thank you, sir. Rate Council, questions for Mr. Parker?
Yes, Mr. President. David Wand for New Jersey Rate Council has a few questions. Hi, Mr. Parker. As I just said, I'm David Wand on behalf of New Jersey Rate Council. I'd like to ask you a few questions regarding your written responses to PSC&G's cross-exam.
Certainly.
I'd like to refer you to question 9, where you state that PSEG appears to hedge 100% of its nuclear output. Is that correct?
I see that, yes.
And you provide a link to the company's January 2021 investor update. Is that correct?
Correct.
Can you explain what hedging means in this context?
In perhaps overly simplistic terms, it just means that they lock in an energy price that they will get for their output. And it may be that it's for their entire portfolio. I think PSEG has claimed that hedges are entered into for their entire generation portfolio, not just for their nuclear plants. But the key issue, of course, is that such hedging activities are, on one hand, prudent for PSEG, but it also eliminates the short-term, day-to-day, week-to-week, month-to-month energy price risk that those plants are exposed to.
Okay, so by hedging, PSEG insulates itself from price fluctuations in the short term. That's correct?
Correct.
Okay. So by explaining to investors in its update that it has hedged 100% of its nuclear output, PSEG is telling its investors that it has mitigated its risk on the nuclear plants. Is that correct?
Certainly to the extent that varying energy prices are a risk factor, that is correct.
Okay. As part of your analysis, you reviewed the applications for PSEG and Exelon. Is that correct?
Correct.
Okay. To your knowledge, revenues from PSEG's hedging strategy was not included in the revenue projections provided by PSEG and Exelon. Is that correct?
I believe it's correct, but to the extent that the prices and hedges are determined in large part by forward prices that both buyers and sellers can see, then I think the use of forward prices is a reasonable proxy for future energy prices that these plants will receive. So just because they haven't locked in some portion of their output at those prices with a hedge doesn't mean that those forward prices are not a good not a good proxy for those energy revenues that they'll receive.
Okay. I want to switch to questions 6 and 7, which you were just discussing.
Yes, sir.
PSEG asked you about operational risk, and they provide examples of operational risk presumably facing its nuclear plants. Is that correct?
Yes.
Okay. And the risks cited by PSEG in those questions, they're not specific to nuclear plants, are they?
No, they're not.
Okay. These are operational risks that any generation plant faces. Is that correct?
To the extent that these risks are defined broadly, correct.
Okay. Thank you. I have one question about the MOPR that you were discussing with Mr. Price. I just want to ask, the only reason that these nuclear units would be subject to the MOPR is that they get the ZEC. Is that correct?
I believe so, yes.
Okay, thank you. No further questions, Mr. President.
Thank you, Mr. Wan. Redirect board staff.
Staff doesn't have redirect.
Thank you. Mr. Parker and of course, board staff can go after commissioners ask some questions here. First of all, I want to thank everyone for their endurance. We're trying to get through this as expeditiously as we possibly can. This is the only time we have, so we better do it before midnight. Mr. Parker.
Sir.
The board has a number of options here. And I'm not looking for anyone to tell us what to do. That's a decision we collectively have to make. But I see we can look at this purely as cost to the ratepayer. We can look at this as exclusively a reliability issue. We can look at this as a combination of the above. If you were in our position, knowing, of course, that the Levitan report is considerably different than what PSEG is looking for, if you were in our position, how would you view this? What would you put your most emphasis on here if you were in our position?
Well, first of all, Commissioner, I'm very thankful that I'm not in your position.
Thank you. That's helpful.
I'll tackle a simple one first. With regard to with regard to reliability, you, the board, should not worry. The fact is that PJM is responsible for reliability. If PSEG makes a decision to retire these plants, PJM will put in place either RMR contracts, or there will be an incentive for new generation or new transmission to ensure that minimum reliability requirements continue to be met. That's the easy one. A more difficult one is what you're getting for your money. What is the cost that you're really paying for to reduce carbon and other pollutants? And I think there was some discussion earlier trying to get a calculation among all the resources that you have now and that are being considered. What is that net cost of reducing or avoiding carbon emissions? And that, number one, is not an easy question to answer. It can be done, and it is done, but it's not an easy one. And then you have to give some consideration to what about sources out of state? And but I think you need to arm yourself, if not for this decision, down the road, to get all these resources on an apples to apples comparison so you can make the best possible decision. I'm sorry, I don't have better suggestions for you. I think the legislation is such that it puts you in a difficult position. And I do have to also say that PSEG is in a difficult position too. Nuclear plants, I am finally at a point where I can call myself an old timer. And many, many years ago, I worked for a company called Stone & Webster that was in the business of building nuclear plants. And there was a famous phrase that it's going to be too cheap to meter, which is to say they were very expensive to build, but the expectation was that they would be cheap to operate. Well, that's not the case. But the fact is, PSEG has a tough decision, and so do you. So I'm not unsympathetic to them, but more importantly, I'm very sympathetic to you and your fellow commissioners for having to make a difficult decision.
And I understand that reliability obviously is PJM's responsibility. By the same token, we have to look at, as I mentioned initially, the cost to ratepayers. And,
Right.
And that's always, as you well know, Mr. Parker, the balancing act that we have to endure in every decision and in every petition that's brought before us. How's it going to affect the ratepayer? And how's it going to affect the utility? And we're not in the business of moving markets here. We're in the business of providing reliable service at the best possible price we can. So it does boil down to carbon emissions, reliability, cost, as I see it, and then probably a combination of all three. So I appreciate your comments. Thank you, sir. Any questions from my colleagues?
I have one.
Yes.
We keep talking about, reliability must run. How does that work? How does that price derived? Obviously, you can't order plants to run and not compensate them. So where would that be derived and how would that factor in?
I think in very general terms, Commissioner, PJM would look at I think what the IMM would call the going forward costs. And I think what the board has referred to as ACR, what are the actual out-of-pocket costs to keep the plant whole? Not necessarily to earn a profit, but just maintaining operations and meeting all their ongoing operating expenses. And then PJM will determine how long such a contract should remain in place to ensure that, in spite of the fact that the owner wants to retire the plant, that it keeps operating until such time as Either there's new generation to substitute for the plant, or new transmission to bring in generation from elsewhere, or some other market solution. So I don't have the details, but that's generally how it works.
Thank you.
Thanks. Any other questions for Mr. Parker before we go on?
Just one question, Mr. President.
Yes.
Mr. Parker, they keep talking about zero carbon, zero carbon. What is going to happen to all that nuclear waste that is being collected on site? Is that very clean?
That's an excellent question. I mean, yes, a nuclear plant is zero carbon, but clearly spent nuclear fuel is an issue. In European countries, they reprocess it. And it turns out that something on the order of 80% of that spent nuclear fuel can be reused as nuclear fuel. And only a small portion has to be disposed of or put into some kind of long-term storage facility. In this country, for whatever reason, we have not decided to go that route. Ultimately, the plan is to find a repository. I don't know whether Yucca Mountain will be resuscitated, but I know that there are a lot of problems transporting the nuclear fuel there from roughly 100 commercial operating plants to one repository. Maybe a regional solution would be preferable. Politically, though, you can imagine how difficult any solution is going to be. So the fact is that all of these plants, all these commercial operating plants have asphyxies, these storage platforms, and the casks that the spent nuclear fuel are stored in have been subject to very, very stringent oversight and regulation by the NRC. The NRC, I think, does a great job in every aspect of their business. So I think if they say it's safe for the near term and perhaps medium term to store these spent nuclear fuel casks on site, then I think in fact, it is okay, but it's still kicking the can down the road, and those casks might have to be there for 1,000 years unless some long-term solution is put into place.
One other question. In terms of, when we went for IDECA, the deregulation, so there were a lot of stranded costs. And so now that by providing the subsidies and asking, pretty much asking the plants to continue, will there be another stranded cost down the road?
I don't know that there'd be stranded costs. I mean, if
different name, yeah.
Well, it may be a different name, but the good news is that whenever PSEG Nuclear decides to decommission these plants, there's a fund that has been built up. And I made reference to one of the, or a couple of the studies that PSEG had done by an outside consultant firm that had very, very detailed, comprehensive estimates of what it would cost to actually decommission the plant, including moving the radioactive materials offsite to the appropriate facilities. And I think the bottom line was that the decommissioning fund for these plants would be sufficient to meet those costs. So that's the good news. Yes, there's going to be a cost hanging out there, but there's a fund that's been built up. Is there, well, so I think that answers your question.
Okay, thank you. Yeah, by the way, I know Stone and Webster. I used to work with them.
Oh my gosh.
There are no other questions, Mr. Parker.
I have
yes.
one.
Yes.
I have one, and you had said that you feel our pain with respect to the decision that we have to make, and the position that we have been put in by the legislature with respect to this legislation, and frankly, how overall we have been rolling out, to address these externalities and policy goals as things have changed over the years. While it is not, I guess, in your purview or ours to instruct the legislature on how they may assist us in better accommodating and providing for these goals to reach these clean energy goals, so that it is an apples to apples, proposition, as you mentioned.
Right.
What would you suggest or recommend to the legislature or to us moving forward, so that we don't find ourselves in this ongoing predicament?
That is a real good question that ordinarily goes beyond my pay grade, Commissioner.
Yeah,
but,
I come up with one a year.
Yeah. Let me think on that. And if I get a brainstorm, or I'll ask my colleagues if they have a brainstorm, policy made in the legislative and executive branches are a different animal, and I'm not sure what solutions, what recommendations would come up with, but let us think on it, and we'll let you know through the right channels.
Thank you. Sooner rather than later, please.
I'll try. By the way, Commissioner Fiordaliso, you had mentioned, what the board should do long-term to address this, generation and reliability issue. One of the little things I wrote myself a note on much earlier today, actually 2 items. One is there's a limited number of BOEM leases off the coast of New Jersey to support offshore wind. And with offshore wind becoming as popular as it has, especially given the aggressive targets by New York, New Jersey, I know Maryland also has a more modest but still aggressive target. BOEM is going to have to find new areas to permit offshore wind plants to be sited. So they need to expand the number and size of leases. I think that's happening, and maybe with this new administration, it'll be happening more quickly. The second item, though, is RPM. There's got to be some way to maintain the sanctity of competitively derived capacity prices for merchant plants, while still allowing states to set their renewable goals and not be penalized by not being able to get the capacity value for those renewable resources. I know a solution is possible, and I would like to think that some smart people are working on it now, but New Jersey is really, if not being hurt now, is going to be hurt over time as more and more of these renewable resources are commissioned, and that really has to be solved.
I appreciate that, Mr. Parker, and yes, I personally, I am confident that BOEM under this administration is going to move a little more aggressively as far as lease areas are concerned. And so we continue to have contact with BOEM. We continue to have contact with the Department of Energy and Interior regarding our efforts in ensuring the fact that we move aggressively toward our goal of offshore wind. As far as nuclear waste is concerned, I do not believe, and this is just me, that there is anyone has the political courage to pull the trigger on nuclear waste. So I think we're going to languish in that area for a long time. And which is unfortunate because I think it hampers so many other things here. I want to thank you, sir, for your input today. And I am sure if I can speak on behalf of my colleagues, we've learned a lot from your expertise, and we thank you.
Always a pleasure. Thank you for having us.
Okay, staff, any redirect from Mr. Parker?
None, Mr. President.
Thank you. Any other witnesses by staff?
Nope.
All right. We have finished before midnight, and I want to thank everyone. That was a joke. You can smile. Nobody's smiling unless they fell asleep on us. I want to certainly thank my colleagues. And I also want to thank all of the experts who testified today. We learn a great deal from evidentiary hearings, and that's why I'm a strong proponent in evidentiary hearings, because of what I personally learn from them. I mean, you can read a lot of documents, but to hear the testimony under oath is an enlightening experience for me, and one that provides me with a lot of information. I want to thank all the attorneys on behalf of the various parties that were involved today for your professionalism. And I think meetings like this, hearings like this, benefit the citizens of New Jersey, whom we all are obligated to serve, regardless of our positions. So I, again, thank each and every one of you. I want to thank Rate Council for their input. I want to thank our large energy users for their input. I want to thank P3 for their input, Market Manager for their input, PSE&G for their input. It has been a wonderful hearing. And again, our transcript will be available once our court reporter finds her fingers again, because there's a lot of testimony here today. And I'm sure she was typing away. So again, my thanks to everyone. And at this point, I will adjourn this hearing. Stay safe, take care of yourselves, and take care of one another. Thank you.
Mr. President, I just have one request just for housekeeping in terms of.
Who is this?
It's Grace Park. I apologize. Grace Park on behalf of PSEG.
You know, Ms. Park, I've given you a lot of latitude today.
And I very much appreciate that. You've been wonderful. I very much appreciate it. I just have one. We had some exhibits that were not part of the record yet, and I'd like to go ahead and move those exhibits into the record.
Right. Can you identify those, or does everybody know what those records are?
They're PS, it appears 1 through 9. And that's how they've been marked as we've gone along today.
Okay.
I would just make a motion to go ahead and move all of those into the record at this point.
Okay, without objection?
Well, to the extent they are the testimony and the cross-examination answers, I think they're already in the record.
But I think there are a couple of exhibits that were used for cross-examination that were not already.
Yeah, we would object to those going in the record. We don't have any idea what those like those charts with the PICO prices and things like that. We have no idea where they came from or what they are. Certainly, we don't mind the statute being in the record. That I don't think you need to move that in the record. I don't know what those charts, where they came from.
There were price charts. They were publicly available. They're really no mystery to them. They were used as part of the cross-examination testimony. And I feel that to have an appropriate transcript, we should include those as part of the record.
Well, but they weren't authenticated in any way. I don't know we don't know where they came from, except, I mean, were the documents they came out of.
Mr. Price actually did authenticate them. He identified the document and provided a basis for cross-examination. We can do that separately.
The PICO, it was the PICO price charts, those two. And I don't even recall. I mean, certainly the statute we have no objection to, but there were those two PICO price charts. I'm not sure what other charts you were talking about.
So it's,
Let me just interject here for a moment, please. I believe that they were requested to be put into evidence.
Correct.
And I asked for any objection at that time, and no one objected. So
No,
is there
I'm
an
taking
objection now, Ms. Brand?
Yeah, but she's putting them into evidence now, Your Honor, and we're.
Although I thought they were put into evidence prior to. That's all.
No, they were not, Your Honor.
Mr. President, we did provide them to the parties on Thursday. They were exchanged on Thursday, and Ms. Brandt has had an opportunity to review them prior to this hearing. And we just request
Yes,
that it be made
that's
part of the
correct. We have had an opportunity to provide them, but we have no idea where they came, what they were
Well,
not.
this is Jeff Mays. I just want to second the objection and just point out that, witness Bowring was asked questions with these charts, but was always careful to point out that he didn't know where they came from. He just showed that this chart says what it says, but the foundation for them hasn't been properly laid.
All right, then I'm obviously been at a different hearing here. Okay. Can you identify where they came from, Ms. Park?
Yes, they are one, and I'm just looking back. You can give me 1 minute. Mr. Price, would you mind pulling them up and providing the board a little bit of context on this? Just because I don't have them.
Sure, let me do that. I believe this was one of the exhibits. These, as I understand it, are publicly available PICO forward prices over time. So it's publicly available forward energy price data.
Are they energy prices? Are they capacity prices? Publicly available? Where? They're not even identified as where they come from.
They're forward energy prices.
Well, who created the chart? In other words, who
It was created internal to PSE based on public information.
Yeah.
Not unlike any, Mr. President, it's not unlike any other chart that we actually produced as part of our application, as part of our cover letter, as part of our discovery.
Well, that was all subject to discovery.
The difference is you had witnesses that sponsored the charts that you created and submitted with your applications. You did not have witnesses here that testified to how these charts were made and where you got the information from.
So what I would suggest that we provide an affidavit with a witness attesting to where the chart came from and attesting to its authenticity.
Would the affidavit,
that would address Ms. Brandt's concern.
would that address your concern, Stephanie?
This is really not how evidence is. I mean, this is really inappropriate from an evidentiary perspective. What other exhibits are you trying to get into evidence here?
I think that's the only other one other than the statute, right, Mr. Price? I just want to make sure there weren't any other charts.
I think there was another one.
There was one other chart.
Oh, there's one other. I apologize. If you could pull that up, I apologize. Yeah, you're right. One other chart.
There was this chart as well.
Right.
Yeah, which we can provide.
And who created that chart?
And then there was also the offshore wind Levitan report.
Also, we could provide a witness to authenticate this chart. It was created based on public information internal to PSE and created by someone internal to PSEG, but we could do exactly what we've done for the other discovery and other application materials.
Mr. Mays, Ms. Brand, do you still object? Hold on.
Still object. I don't see how these are relevant. I don't see how these are, I don't see how PS creating charts after the fact. You certainly are permitted to cross-examine people based on anything, really. And so we didn't object to them based on cross-examination, but now you want to put them into evidence and after the fact with, this is not appropriate evidentiary practice. I mean, that's just
summarize forward prices of energy prices. That's entirely relevant to this proceeding. Um,
No, they're Pico forward prices.
and we provided Pico prices as,
Well, if they're matters of public record.
Hold
you
on,
can-
let
matters of public
one
record.
individual finish their comment, please.
so
Mr.
Mr. President,
Mays.
The objection isn't relevance, it's foundation. And that, and we do continue to object to entering them as other
Okay.
evidence for the truth of what they assert. However, if they were allowed in, we would want the opportunity to respond with our own data and our own
All right.
affidavit.
Those
But you
are
think-
two items, these two charts we're talking about, is that correct?
No, there's a third document too, right?
All right, what's the third document, Ms.
Mr. Price will pull it up.
The third document is the Levitan offshore wind capacity report.
Okay. Anybody have an objection to that being submitted as evidence?
We won't object to its authenticity, but we certainly will reserve the right to argue relevance.
Mr. Mays?
We agree on this one as regarding relevance. The other items are of more concern.
Okay. I am going to disallow the two charts. What else is in question here? I'm going to allow the Levitan report. What else is in question?
I think that's it, Mr. President.
Stephanie?
We don't have anything else.
Good. Mr. Mays?
Nothing else, Your Honor.
Anyone else? Okay, so everything except the two charts will be admitted into evidence. Everybody okay with that?
Yes.
Democracy still reigns in America. Nobody smiles. Why does anybody smile? We're not deciding life and death here. All right. Any other questions? Any other objections? Or can I have a 5 o'clock beer?
I have to wait a half hour.
28 minutes.
Not quite, about 28 minutes.
We got a macro meeting.
We have a macro meeting that started 3 minutes ago.
Well, you go for the MAC group meeting and tell me what happened.
5 o'clock somewhere.
Again, I want to thank everyone for their cooperation. It's always a pleasure to get with you. And again, I can't overstate the importance of evidentiary hearings. And if we have a choice of having one and not having one, I'm always in favor of having one because it does provide, for me, a learning experience. So I want to thank all of you. And again, stay safe. Thank you. We're adjourned.
Thank you.